I request Mr. Manoj Kumar, Mr. Chalasani, Mr. Atanu Sen, Mr. Arun Ladda, Mr. Shashi Krishnan, and Dr. Rajiv Singh to kindly come forward and do us the honors.
वक्रतुण्ड महाकाय सूर्यकोटि समप्रभा निर्विघ्नं कुरु मे देव सर्वकार्येषु सर्वदा। ॐ गणपतये नमः। ॐ गणपतये नमः। ॐ गणपतये नमः। ॐ गणपतये नमो नमः। श्री सिद्धिविनायक नमो नमः। अष्टविनायक नमो नमः। गणपति बाप्पा मोरया।
गणपतये नमो नमः। श्री सिद्धिविनायक नमो नमः।
Thank you, gentlemen, for doing the honors. And I'd now like to call upon stage Mr. Atanu Sen, former chairman NPS Trust, PFRDA, MD and CEO SBI Life Insurance Company Limited, and our chairman of ICC National Expert Committee on BFSI, Mr. Sen. I would now like to call upon Mr. Venkat Nageshwar Chalasani, Chief Executive, Association of Mutual Funds in India, AMFI, to kindly come on the stage. May I now invite Mr. Shashi Krishnan, Director, National Institute of Securities Markets, NISM, to kindly join. Sri Arun Ladda, Director, JR Ladda Financial Services Private Limited. And finally, Mr. Manoj Kumar, Executive Director of SEBI, our chief guest, to kindly come and join us on the stage. Thank you so much, gentlemen. Kindly take your seats after the group photograph. We are really happy and proud and grateful to our dignitaries on dais who have traveled all the way from Bombay to come and attend this meet. And ICC, in fact, is celebrating the centenary year. This celebration has started from 15 December in 2024 and will continue till the next year. And in this centenary year, we are very happy. We are doing a lot of activities, And 17th Mutual Fund Summit, I think that speaks itself about the quality of program and the quality of service we have been doing for the capital markets. And otherwise, we would have not succeeded in continuing this program for 17 consecutive editions. So thank you, all the regulators, all the members, all the sponsors over the years who have supported us. And without taking any more time, I'll now request Mr. Atanu Sen to kindly deliver the welcome address and also set the tone for today's summit. Over to you, Mr. Sen.
Good morning, distinguished guests, ladies and gentlemen. It is my pleasure and honor to welcome you all in this program today. On behalf of the Indian Chamber of Commerce, ICC, I would like to thank you all for making it convenient in today's program. It gives me immense pleasure to welcome our chief guest, Sri Manoj Kumar, Executive Director, SEBI, Securities and Exchange Board of India. I also extend my warm welcome to our guests of honor, Sri Venkat Nageshwar Chalasani, Chief Executive, AMFI, Association of Mutual Funds in India, and also Sri Shashi Krishnan, Director, National Institute of Securities Market, NISM, in today's event. I extend my warm welcome to Sri Arun Ladda, Director, JR Ladda Financial Services Private Limited, in today's program. Sirs, it is really a privilege and honor to have you all with us today. Ladies and gentlemen, to set the tone of today's discussion, I want to make a few brief points about the mutual funds industry in India. Mutual fund is one of the cogs in the wheel of financial sector savings and investment. Others being, as you all know, are the deposits, the insurance, and the pension funds. The financial services sector will play an instrumental role for shaping the economic landscape of India as it strives to achieve the overall goal of a Viksit Bharat by the year 2047. India is targeting to achieve universal financial inclusion by year 2047, ensuring access to the financial services for all population segments through digital enablement. Further, as you all know, the objective of Viksit Bharat is to empower India and help create a society that is prosperous, as well as inclusive and sustainable, wherein all of its citizens have the opportunity to thrive and meaningfully contribute to the nation's progress. In the recent decades, India's financial ecosystem is characterized by a new era of accessibility, as well as innovation and a customer engagement. The widespread generation of UPI, Aadhaar-based payment systems, and a full range of digital solutions have established a robust interoperative financial network. So, financial products are now designed to be more adaptive and intuitive, effectively making it easier for customers to interact with financial service providers who are there. Many of them are here today. In India, the capital money market and financial services industry have experienced robust growth due to progressive reforms in economic policies. One of the successful stories in the financial services sector in recent years has been the impressive growth of the mutual fund industry. India's mutual fund industry has emerged as a powerhouse, attracting a surge of investors seeking avenues for wealth creation and financial growth. Now, just to set the tone, now let us look back at the history of mutual fund industry in India. Many of you are aware, many may not be so, but the history of mutual fund industry can be traced back to 1963 with the launch of the Unit Trust of India by the Government of India under an Act of Parliament. UTI was launched under the regulatory and administrative control of RBI. In 1978, the regulatory and administrative control of UTI was transferred from the RBI to IDBI in those days. The first mutual fund scheme was introduced in India by UTI was the Unit Scheme 1964. UTI had assets under management in those days worth 6,700 crores, that is by the year of the end 1988. In 1987, just before that, public sector enterprises such as SBI, PNB, Canada, and other non-UTI segments such as General Insurance Corporation of India and LIC entered the market. From the year 1993 onwards, private sector funds were established in the mutual fund industry. In the same year, mutual fund regulations were introduced in India under which all mutual funds except UTI had to be registered. In 2003, UTI was repealed, the UTI Act actually, the 1963 Act was repealed and was divided into two separate entities, the UTI Mutual Fund, which is sponsored by PNB, SBI, LIC and others. And the second entity is the SUTI, the specified undertaking of the UTI. This bifurcation was effective from February 2003. Now, let us move forward to the current state of the MF industry and growth forecasts, which are near term till 2030. And let us look at that. In the last 2 decades, the Indian mutual fund industry has witnessed a paradigm shift. The industry is primed for significant growth, offering immense investment potential. The overall net assets under management of the mutual fund industry currently, as it was also mentioned in today's paper, rose to nearly 72.20 lakh crores for the first time through inflow of systemic investment plans, which is actually in 1 month only in May 2027 to a fresh high of 26,688 crores. That was the inflow in a month. The trend of substantial increase in retail contributions to SIPs highlights the pervasive digital presence across the nation in a constantly changing financial landscape. So, as we will be discussing today, technology is undoubtedly a powerful force transforming the way investments are made in the case of mutual fund investment. So, technology is to an extent substituting traditional distribution methods. With advancements in technology and data analytics, fund managers are expected to provide personalized investment advice to investors based on their unique investment goals, risk appetite, and financial situation. While actively managed mutual funds continue to dominate the industry, there is a growing trend today towards passive investing. In India, passive funds AUM has increased significantly, reflecting investors' preference for lower cost investment options. We are talking about sachetization today. We'll be discussing in many of the panels why sachetization could be a way forward. Also, to reduce the compliance burden of AMCs and foster innovation, SEBI is engaged with the mutual fund industry to introduce MF-light regulations. Recently, SEBI has enforced stringent measures against front-running and insider trading towards building a more secure investment environment. The regulation, I feel, would increase confidence amongst investors and their investments are being managed ethically. As investors seek to diversify their portfolios and benefit from alternative asset classes, it can be expected that the industry will expand its offerings in this space. Having said that, in fact, let us also look at what could happen in the next 5 years and what are the growth prospects. In fact, in the next 5 years, today, as I was mentioning, it is nearly 72 lakh crores. It would be growing, that is the projection, by at least 18% CAGR to 20% CAGR. And it would be, lead to a, if it is growing at 18% CAGR in the 5 years, it would double or maybe 2.5 times. So funds are a big part in India's financial services industry. So as I mentioned earlier, in recent years, the mutual fund has experienced a surge in growth. This is primarily attributed to the increasing population and wealth of the nation. This has increased the number of individuals willing to invest in mutual funds. And the digital penetration, the emergence of smart cities, improvement in data speeds have also contributed to the shift of asset shares towards more diminutive, smaller towns and cities. The increase in retail contribution through SIPs, that is the systematic investment plans, indicates the level of digitization in India. The mutual fund AUM increased 77% post-COVID. And because of that, new products, various instrument options to the investors are there. And institutional investors, they are given a low-risk opportunity to create new products or add flexibility to their products. It is now, India is now the second largest mutual fund industry in the world. It is one of the fastest growing markets in the world. In fact, in today's paper itself, it was mentioned that in the last 10 years, it has grown at the rate of more than 24% per year, CAGR. As well as the other thing that is there, the smaller cities or the cities which are B20 towns beyond the top 15, they now constitute 31% of the AUM corpus, which was only 10% a few years back. So smaller towns and cities are actually, the investors there are taking a lot of interest and they are investing. That is one aspect. The other aspect is there are now over 40 fund houses in India. In the latest count, I think it is 48. And the Indian mutual But the top 10 fund houses or AMCs manage more than 70% of the total mutual fund assets. So there is a concentration. In addition to the asset base, retail investors' share of the industry's assets, as I was mentioned, only in the last month or the last 2-3 months increased to 57% compared to 53 to 54% last January. Having said that, the smaller cities, as was mentioned, the reason that because they have done so well is that there is a whopping 100% growth in the past 3 years, which has had a significant impact on investor behavior and how investors view stocks. At the same time, the number of DMAT, CDSL, and NSDL accounts has gone up by nearly 3 times. The number of SIP accounts has doubled, as well as by one of the most significant changes in the economy and India's saving habits has been the rise of small towns. In fact, if you compare fixed deposits as well as mutual funds, earlier the deposits, in the banks used to be, the mutual fund used to be about, again, 8 to 10% of the deposits in the bank, but today it is more than 30%. I think it is 34% as of today. So having said all that, the compounded annual growth which is taking place is huge. Therefore, it is imperative that ongoing efforts to educate and engage investors, that is another one of the focus today, in smaller cities, and also take care and drive up future growth in mutual fund investments. Having said that, in fact, I've given you a backdrop of the history, backdrop of what can happen, as well as, in fact, we have a few panel discussions specifically focusing on these issues, the product innovation, the risks, the education aspects, as well as the sachetization, how small investors can be brought into the fold. The Indian Chamber of Commerce is encouraged by the significant response today we have received in organizing the 17th ICC Mutual Fund Summit. I hope the summit will be a major platform for meaningful deliberations and interchange of ideas on how emergence, evolution, and convergence of disruptive forces are continuing to shape the future of AUM, the asset management industry, creating necessary linkages between industry and the policymakers. And we have the policymaker today here with SEBI. As well as with these few words, I once again welcome all our eminent guests and speakers and look forward to fruitful deliberations and interactions. Thank you.
Thank you, Mr. Sen, for welcoming all our dignitaries and delegates and wonderfully setting the tone for the whole day and the entire summit. Thank you so much, sir. I will now request our guest of honor, Sri Venkat Nageshwar Chalasani, Chief Executive of AMFI, to deliver a special address on mutual funds transforming financial inclusion into financial well-being. Over to you, Mr. Chalasani.
Thank you very much. Respected Mr. Manoj Kumar, Executive Director, SEBI, my senior colleague in State Bank of India, with due respect, sir, Sir Atanusin, sir, Sri Shashi Krishnan, NISM Director, Mr. Ladab, dignitaries of the dais, good morning to all of you. First of all, hearty congratulations to ICC for completing 100 years. And also for doing this 17th mutual fund session, but completing 100 years is something great. And we're all looking towards the Vikshit Bharat, which we are going to achieve in 2047, the developed world. So we'll be talking something about that in my speech when we are transitioning from financial inclusion to financial well-being. So it's both an honor and privilege to me to address you today on the topic that lies at the heart of India's economic transformation, the transforming from financial inclusion to financial well-being. In fact, I had the privilege of being part of the financial inclusion journey, which started off in 2014-15, since I was also with State Bank of India along with Sir. And that was a time when there was a drive for financial inclusion, and almost 50 crores people were brought into the banking sector. And today we take pride, and I'm also very happy to be a part in moving from financial inclusion to financial well-being. We were talking about the Indian economy just a while ago when we were sitting outside, and we find that we were discussing that the way in which Indian economy is prospering. In fact, India is one of the fastest growing economy in the larger economies that's happening in the world. All whoever is giving the data talks about Indian economy going at a speed, at a pace between 6.3% to 6.7% in the next ensuing year, despite the fact that there are many headwinds. Like you're looking at the geopolitical tensions, you're looking at the inflation numbers, all those geopolitical tensions are there. But despite all these headwinds, there are factors which are ensuring that Indian economy moves in a positive direction in a faster pace, as I said, between 6.3 to 6.7%, and towards a direction towards the Vikshit Bharat of developed country by 2047. While we are talking about all these things, the prosperity, the richness of the country has to be spread across the length and breadth of the country. That is what we are talking about financial well-being. When we say people need to, the GDP is growing, we are growing at going to become we are the third largest economy of the world. But the per capita income is something that is extremely important. When we said that our GDP is third in the world, Japanese per capita income is around $33,000, whereas Indian GDP per capita income is around $2,400 per month, per annum. So when we are looking at this per capita income, what we are essentially is the property has to be distributed across the length and breadth of the country, across everyone. That's what we call as a financial well-being. And when we talk about this financial well-being, what is that we mean? We mean to say that people should save smartly, invest properly, and then create a wealth on a sustainable basis. If you are going to save, invest, and maintain your wealth sustainably, that is something that we can call as a financial well-being, moving away from financial inclusion to financial well-being. And as we speak now, in fact, last month, Reserve Bank of India has come out with the data talking about the total savings when compared to the disposable income of the household property of the household people. It says that only 33% of the total is the total saving of the total disposable income. Out of this 33%, 66%, I mean, so what we're talking about, if you look at 33%, 66% of this is going towards the real estate and gold. Remaining 34% is going towards financial assets. And within this financial assets, again, the majority of it, that is around 37%, or in fact, it used to be 40%, it has slipped to 37% towards banking. There is some amount which is kept in the form of cash, etc., etc. When it comes to the shares and securities, which includes mutual fund, it is very minuscule. So you're talking about today's headlines where people did say, I mean, there was a talk about excessive exuberance in the mutual fund industry. But when you look at these numbers, it speaks that it's very, very less being contributed. While I do agree to the fact that the number has gone up from around 10% of the banking deposits to, as we speak now, to 32% of the banking deposits. But let me put another data point before I move to how we are doing from financial inclusion to financial well-being. One important data point is the assets under management as we speak today, as Atanu sir did mention, about 72 lakh crores. This assets under management is around 20% of the GDP of Indian economy. When we look at the developed economies like US and others, it is more than 100% of the GDP. When we talk about an average assets under management of the globally, it is around 65%. So we are just scratching the bottom, sir. It's not, while I do agree that we are talking about the base at which it has grown is quite substantial, but there is so much we need to do. The sir had did talk about the way in which the mutual fund industry had started off from 1963 to today. But let me put some numbers. The fact that in 2017 there was a small change that SEBI has done, talking about saying that 1 basis point of all the assets under management of all the AMCs should be set aside for the purpose of investor education and awareness program. While the 2 basis points has been set aside, 1 basis point has been transferred to AMFI for the purpose of financial literacy, investor awareness, and education programs. And from that, the mutual fund Sahi program has started, and it made a big difference. What it has done, although it started off in 1963, as Atanu sir had mentioned, and the way in which it has progressed over the last, despite the fact that it was in existence for 56 years up to 2017, mutual fund industry used to be only for the elite, high net worth individuals. People were not aware about this entire concept. The jargon that was there, be it in the form of SIP, be it in the form of NAV, be it in the form of the various risk parameters, people were not able to understand about that. This mutual fund Sahi campaign ensured that this has mutual funds migrated from the corporates, from the high net worth individuals to the retail investors as well. It has become a wave, and it went into the nook and corners of the country. And the numbers, what again Mr. Atan Hussain had spoken about, became very revealing. In 2017, when our assets under management was around 11 lakh crores, it from 21 lakh crores, sorry. And from that, today as we speak, now it is 72 lakh crores. It has moved from 1 crore investors to 5 crore investors, and from 4,000 crores of SIP to 26,600 crores SIP every month now. And of course, as a deposit percentage also, if it migrated, moved from 10% to 32% of the total deposits. So there is a phenomenal growth has been witnessed. But again, as I said, this growth is very minimal when I look at the global numbers. They are very less. So, and one of the important things which Mr. Sain had spoken about is putting the guardrails in place. And let me tell you about the disclosures which the asset management companies do. Trust me, sir, in India, I was comparing the disclosures that are being done across the globe. In fact, recent MDAC meeting, which what we call as mutual the market the data advisory committee, which is there in SEBI. They were looking at the data that is being published by various mutual funds, asset management companies across the globe. And we made a presentation there, Sir Manoj sir. There we have shown that in respect of Indian AMCs, the disclosures are quite substantial. They are much more than what is being done across the globe. We look at daily NAVs, look at the true to label products, look at the direct plan disclosures, monthly portfolio fact sheets, stress test and scenario analysis. If you remember last year, in the same place where we had the summit, the whole time member did talk about the disclosures, stress tests that has been done in respect of medium, small and mid cap. So these disclosures are something that is phenomenal. We do more disclosures than whichever company, other asset management companies across the globe. And more than that, we have the risk management company. And of course, the guardrails that we're talking about, Mr. Sain did speak about the front running. In fact, the prevention of market abuse is something that has been started. SEBI has asked all the asset management companies to implement it. We have risk management committee also, risk management board, committee of the board, which assesses the risk of the various activities that are being done by the asset management companies. So sum and substance, what I'm trying to explain here is we are keeping all the necessary guardrails that are required to be done for assets that are expanding at a faster pace. It's extremely important. While we do an advertisement and talk to you, everyone, saying that invest in mutual funds, it is extremely important on us because people down the lane who is investing even small amounts is trusting, and it's a fiduciary capacity. We are holding the money of someone else's property, and therefore we are ensuring that all best risk management practices are put in place in all these asset management companies, and under the SEBI surveillance, SEBI's guidance, we are looking towards ensuring that the money is being protected. So these are subject to market risk. We do communicate that on a regular basis. At the same time, we ensure that the monies are protected to a large extent. But while I said the assets have grown at a faster pace, but then there's so much we can do because the numbers speak themselves. When we're looking at the global figures at where we talk about our assets under management is just around 20% when compared to the 65%. So we are looking to expand. What is that we're going to do? What is that we are doing in order to ensure? The most important thing that while there is an innovation in products, there are a number of new products that are coming up. Like I'm sure all of you heard me speak about MF Lite. There is one thing that we are introduced recently is SIF, which is again being introduced to ensure that to capture the investors between 10 lakhs and 50 lakhs. Those are the investors who can take higher risk. Therefore, an innovation, new particular product is being introduced. But in respect of ensuring that the property is distributed across the length and breadth of the country, for the financial well-being, what we are trying to do right now is we are penetrating into tier 3 and tier 4 cities. Although again, Atan Hussain sir did speak about saying that there is an increase of investments from the tier 3 cities. But the fact is, explain to them, do this financial literacy, explain the risk to them, and tell them that, look, instead of investing into those assets which are not going to generate income, it's for someone who needs to generate income. At the same time, there is a growth in wealth, and explain the risk. Talk about the financial goals that you need to set up, what products that are required to be done. This comes from the financial literacy. And for that purpose, what we are trying to do is, as an AMFI, we are adopting the states. We have adopted 3 particular states, Meghalaya, Bihar, and Andhra Pradesh. And in fact, we're going to add one more state to it, which is Orissa. We are going to conduct extensive investor awareness and education programs. While we do it across the country, we are trying to focus on these 4 states, and there are other MIs who are going to do in other states as well. One of the important cogs in the wheel, one of the most important sources for us to develop this particular industry is a distributor network. We have, as we speak now, 250,000 distributors across the country who distribute our products. But in order to increase that, we do campaigns, what we call as Distributor Kare Shuru, to explain to them that saying that distributors' job is one of the very important job creation for individuals at this age. At the same time, we are also trying to tie up with Indian Post, because they do have around 250,000 postmen, and out of which at least 100,000 postmen, if they convert themselves into distributors, that's going to be an additional addition to our distributor force that we're looking at. In addition to that, to propagate this, we are doing something what we call as Tarun Yojana program, which was launched by the previous chairperson. And that's where we are catching the investors at the young age. We are going to down to the high schools, teach the students at 9th, 8th and 9th classes, explain to them about the financial products, conduct tests, and then create an investment habit to them. So we are trying to do all that is possible, enter into, bring the curriculum into some of the universities. In fact, during the breakfast time, we were talking to Mr. Shashi Krishnan. We are talking about integrating insurance institute, having a program that has an immersion of both for the insurance product, banking, and even capital markets. Looking at the immersion of these particular courses, tying up with the university, if some of the universities to impart financial education. But one thing that I would like, one data point I would like to add here is that while the literacy rate in our country is more than 80%, financial literacy is only 30%. In fact, it is 27% is a financial literacy. The objective is to increase this financial literacy by doing all the steps that I talked about, so that the development that we are looking at is spread across the length and breadth of the country instead of being restricted to very few people, so that the fruits are taken by, enjoyed by everyone. So, in fact, I would just take a quote from Steve Jobs, who said, "Great things in the business never done by one person. They are done by a team of people." So in this mission to transform the financial inclusion to financial well-being, collaboration is the key. The regulators like SEBI, Manoj Kumar sir is here, and with whom we constantly interact. This is, again, sir, not before you, but I had interacted, being the head of the international banking in State Bank of India. I did interact with 35 regulators across the globe. And this is the only regulator, sir, where I find that you are on a collaborative approach, on a consultative mode. You consult with us before anything is done. And whenever there are certain difficulties, you're approachable. We come to you, talk to you, and the things are changed. So that way, regulators like SEBI, institutions, of course, like AMFI, distributors, fintech partners, educators, and more importantly, investors themselves must come together to build an empowered, investment literate India. So the journey from financial inclusion to financial well-being is not in one-time leap. It's a sustained, deliberate climb. The mutual fund industry has proven that with the right mix of education, access, and trust, every Indian can become not just a saver, but an investor and eventually a wealth creator. So let us continue to work together to make a secure, inclusive, and prosperous Vikshit Bharat. Thank you. God bless all of you.
Thank you, Mr. Chalasani. It was wonderful and eye-opener, I think, for all the delegates present in this hall. And sir, taking your a cue from your deliberation, that ICC will be very happy to partner AMFI in spreading the awareness and whatever actions you need, in the leadership of Mr. Atanu Sen sir, our chairman, and also Mr. Arun Ladda, who is our mentor for the capital fund markets. We'll be very happy to take this mission and collaborate with you on these things. So thank you so much, sir, once again. And now it's my pleasure to invite another guest of honor, Mr. Shashi Krishnan, Director, National Institute of Securities Market, on a special address on Will Technology Disrupt the Role of Distributors? Over to you, Mr. Shashi Krishnan.
Morning, and first of all, congratulations to ICC on its 100th year, and especially to the Mutual Fund Summit, which is at its 17th year. And thank you, Dr. Sen, Mr. Sen. I keep saying doctor because I'm in the academics now. Thank you, Mr. Ladda. Manoj is going to, obviously give you a regulator's view of where this industry is going. And Venkat obviously gave us all the statistics on the mutual fund business. And I was asked to talk about, will technology disrupt the distribution business? And I'm sure there are a large number of distributors sitting in this hall today. And I don't want to mince words and say that, yes, technology will disrupt the distribution business, and it will disrupt the distribution business big time. So I am not here as a bearer of good news, possibly. And therefore, I would only urge you to give me a patient hearing. But, let me just take a step back and you look at our own experience in the markets. I mean, where were markets, when we began our career in the 80s, and where are markets today in 2025? I mean, it was an open outcry system. Settlements would happen, as we used to say, T plus any time. I still remember I used to deal with the Calcutta Stock Exchange, and believe me, the trades that I did through the Calcutta Stock Exchange would never get settled. I mean, with due respect to all the brokers sitting in this room. And I've dealt with a large number of brokers from Calcutta. We've moved to something called T plus one now. That's what has disrupted, the very marketplace itself. So why will this not happen to distribution? Okay, let me take a step back now. When we moved from from agriculture to the industrial revolution, you had farmers who needed to transform themselves to be, let us say, factory workers. And it was a fairly seamless transition, because you could always train that farmer to become a factory worker. When we moved from the industrial revolution to the service revolution, we had to retrain that factory worker to become, say, a cashier or a retail seller. And that was not very, very difficult. What would happen today, especially look in the distribution business, you would have to train somebody who is today going and selling, say, mutual fund products, customer to customer, door to door, to somebody who will write algorithms. And will that happen? Well, I think we all need to sit back and try and imagine how that world will look like if we really want to sort of confront this problem. And I was the other day reading an interview given by Ray Kurzweil. And Ray Kurzweil is a renowned inventor and a futurist who built a career on predicting and predictions that defy conventional wisdom. And in this interview, he states that the exponential growth in raw computing power is bringing us closer to the moment when people will merge with artificial intelligence and augment themselves with million times more computational power than their biological brains are currently provided with. Okay, for whatever that means, I think all he's trying to say is that we're going to create something that is thousands of times, maybe millions of times more powerful than the brain. And when you get to a stage when you're creating something like that, that moment, as we all futurists call, is a moment of singularity. I don't know when singularity will happen. It'll happen definitely before 2047 because it's Bharat. So, but that's not a moment that is very, very far from us. And therefore, what will happen is we will be creating so many digital signals that these signals itself will sort of create a revolution. And therefore, I think all of you guys in the distribution business need to be prepared for this revolution that is going to take place. And therefore, let's not mince words. Technology will disrupt distribution. And what will typically happen is that distributors now will have to acquire new skills. I think the challenge is, how easy is it going to be to acquire these new skills? I mean, you will necessarily need to be a digital citizen. And therefore, there's going to be a dramatic change. It's not going to be those kind of gradual changes we saw when we moved from agriculture to industry and from industry to services. It'll be something a lot more important. And therefore, the roles that we traditionally played as distributors, and those are roles like, customer onboarding, customer acquisition, even providing advisory to your clients actually may clearly not be the roles that distributors will be expected to play, in the age of technology. I am not saying it's going to happen next year. It's not going to happen 2 years down the line, but it's going to happen 5 years down the line. In fact, I come from, we create your 5A examination, which I mean, all of you need to pass to sort of operate as mutual fund distributors. Believe me, in my board meeting yesterday, I was told by my board that you at NISM may become history simply because the entire content for your 5A will be created by artificial intelligence. The question bank will be created with artificial intelligence. Do I need an NISM? I don't know. Maybe my future is also at stake as much as your future is at stake. So, but on a more serious note, anything that requires possibly human intervention can be done a lot more efficiently by technology. I'll give you a very, very simple example. The largest number of accidents that are created, that happen on Earth are primarily because of human negligence, right? It is because somebody goes to sleep at the wheel. It is because somebody is drunk and drives. It is because somebody is under depression and is driving and lands up in an accident. Just imagine when you have driverless cars where you have cars talking to one another. Ultimately, it's a network, isn't it? So if one car can talk to another car, the number of accidents that you would have will actually come down dramatically. The cars will also be able to sense whether people are going to cross the road, what is their state of mind. And therefore, believe me, it's not merely digital. It is not merely artificial intelligence. It's also about the fact that all these forces will be networked to provide a significantly more, powerful product, which will clearly be a threat to what we can do in distribution. Let me give you some statistics. Young adults, those between the age of 18 to 35, form a key demographic in India today. And that's the kind of demographic that Venkat was talking about, which all of you guys need to reach out to, all of you guys need to sell mutual fund products to. Today they account for a population of something like 473 million individuals. Large opportunity, no doubt about it. 93% of them actively save money. Saving money is not the same as investing, but 93% of them save money. About 30% of them, invest a part of that money, many of them in mutual funds through SIPs, etc. Right? 30% of them are clearly clueless. They have the money saved, but they don't know what to do with it. But I think the more worrying part of it is that over 60% of those 30% of those 473 million people who invest have never seen a distributor. Right? And those are studies that we've actually done on the ground. They have never seen a distributor. They use social media like YouTube and X, right, for their financial guidance. But even more, stark is the fact that it is not merely that they go to influencers for advice. The fact is they are also transacting based on the recommendations that they're getting from influencers or from what they see on YouTube or what they see in on X. And therefore, if they say that, this is a mutual fund that you should put your money into, or this is the mutual fund that you should sell, or this is the sector or thematic fund you should put into, they're putting their money over there. They're actually, transacting basis the advice they're getting out there. So where is, even today, the distributor in that piece? And I think that's something we all need to, understand, because the digital revolution is clearly going to see a larger dependence of a lot of people who come to invest into the mutual fund industry on, the internet and what they get out of the internet, right? And no doubt about the fact that the internet is going to solve a set of our problems. But, decades ago, there was a psychologist and a Nobel laureate, by the name of Herbert Simpson. And, he pointed out a couple of things. He says, first of all, humans are struggling with an information overload. There is such a huge information overload out there that we as human beings just don't know what to do with it, right? More than everybody, there's a wealth of information out there. But what that wealth of information is creating is clearly a poverty of attention. Because our attention spans have dropped so much because there's so much of information out there. And that's where I think, the role of the distributor now comes back to saying that how do I then augment people's ability to, uh, concentrate more, to pay more attention to the more important things that are involved while making decisions as far as your financials are concerned. And the second big problem is focus. People have lost their ability to focus. And I think that's the second big thing that distributors will need to learn. So your role now changes from merely onboarding people, merely sort of, getting people to fill up forms, simply helping them do transactions, to actually getting people to focus, getting people to sort of pay attention to a whole set of things. And that's where, interestingly enough, we've been grappling with this problem, because that's where even people like us, the educators, are facing problems. If we need to go and do financial education for the masses, we're actually grappling with these very same problems that you as distributors are going to be grappling with. And therefore, we keep saying in the mutual fund business, the biggest virtue in the mutual fund business as investors is patience. Let me tell you that patience is no longer seen as a virtue in this world, right? Because there's an instant access to information. This is coupled with our behavioral biases. This leads to FOMO. And therefore, I mean, one of the biggest challenges that all of you will face in this, digital age, in this age where, people have got instant access to technology, is to how to get people to learn the art of patience. And I think the kind of skills that you will need to do it is far, far removed from the kind of skills that all of us have today. And, we need to step back for a moment and ask ourselves, why is it that in this internet age, in this age of technology, the younger generation, the Gen Zs, why is it that, they're finding it, distributors are going to find it so much more difficult to reach out to them? And I can see a couple of reasons for this. One is that first, it is much easier to access information online. So, I mean, why should I consult with a distributor? I mean, it involves, walking into a distributor's office or picking up a phone and speaking to the distributor. How many Gen Z guys actually pick up a phone and speak to a distributor? Even today, if I need to speak to Sensab, I'd rather send him a WhatsApp message than pick up a phone and speak to him, right? So why do you think they will actually walk into your office to consult you if they can get that very same information over the internet? What value are you going to add out there? Second is that what is the kind of support services that you as mutual fund distributors will have to offer that I can't get over the net? I mean, literally today, I have not walked into my bank branch for the last 15 years because I don't see any value that that branch manager is going to add to my banking transactions. And therefore, that's where you need to make a difference and need to establish the fact that, yes, if you walk into my office, I will be able to make a difference. You don't need to, get all your services over the net. And lastly, advisory services. We keep talking about the fact that, even in the age of technology, a human touch is needed. I don't deny this fact. But the fact is that what is that advisory service that you're actually going to offer us, an investor, if he walks into your room? Because if you're only going to be about product information, that product information I can anyway pick up from the from the net. I don't need to walk into your office to get that product information. So there's something that you guys will have to give that is possibly significantly more than what people can pick out from the net, right? And I think at the end of the day, I think the bottom line is that you will have to engender trust. You will have to figure out that in this world where technology is going to disrupt literally everything, how do I engender trust? And I think that's going to be your very, very big challenge. So therefore, I mean, coming back to, a lot of the traditional jobs, you will find that all of them are going to be taken over by technology. And, future customers will actually look for the ability to switch seamlessly between digital and humans, right? So even if you make yourself indispensable, people will actually look for a facility where they can switch from humans to digital and digital to humans. So they'd like to do a lot of their, let us say, routine tasks. Tasks like, for example, uh, tracking your investments or KYC or transactions. All this will go to digital. There's nothing you can do about it, right? It will ultimately go to digital. What you will also have to do is, as distributors, create platforms that can support these digital things. Because it is, if they come to you to do their digital transactions through the platforms that you have created, they will come to you to do a lot of other things, right? And therefore, all these things are now not nice to have, believe me. They are a must have. And therefore, as distributors, I think you need to look at it at two levels. One is, can I create these digital platforms where I can sort of automate a lot of what investors want to do at very, very low cost, so that I can support them in that journey, which will then engender trust, and then they will come back to me for a lot of other services that I can offer, right? And that, I think, is going to be the way, business models in the distribution space, will grow. And believe me, people will demand human assistance for complex decisions. Like, there will be so many more products like the SIF or portfolio PMS products that, the mutual fund industry will keep offering, investors. And you as distributors will have to handhold them in those complex decisions, because maybe the machine can't take over all complex decisions. And therefore, what investors will be looking for would be for objective advice and high quality solutions across their life cycle stages. And if you can sort of create a business model that fits into that, I think you will be able to make a very, very successful distribution business. So what happens to your business because of automation? So let's not run away from the fact that automation, technology is going to disrupt this fact. But what happens because of that? I think the most important thing is going to be learnability. And I think that is the only antidote to automation. All of you in the distribution business will have to be open to updating your skills. And the kind of skills that you will have to update yourself with, the kind of expertise that you will have to build, will be far different from what you currently are doing. And therefore, I think you'll have to be open to doing that. And in essence, my own opinion is that distribution in the next maybe 5 years, maybe even less, will become increasingly digital first. It will become increasingly data driven, and it will become increasingly personalized. You will have to go in for hyper personalized solution for every single customer of yours. And believe me, technology will be able to help you with that. And therefore, I think it's only those distributors who embrace technology who will sort of remain relevant. Thank you so much.
Thank you so much, sir. And I think all the distributors present in this room have really taken your advice, and they will do accordingly. It's time to move on and request Shri Arun Ladda, Director of JR Ladda Financial Services, and also he is heading the Capital Market Subcommittee of the ICC BFSI, to give a special address. Mr. Ladda, please.
Good morning, ladies and gentlemen. Good morning, all. Thank you. This year marks a momentous occasion for Indian Chamber of Commerce, because we are operating our centenary year. It gives me immense pleasure that Indian Chamber of Commerce celebrating 100 years, and it was started by Mr. G.D. Birla with other industrialists. And Indian Chamber of Commerce has nurtured entrepreneurship, supported business, and shaped nation's economic progress. Currently, Indian Chamber of Commerce has got 100 domestic offices and 25 international operations representatives across globe. So, it's my duty first to welcome Mr. Manoj, SEBI whole-time member, to City of Joy, Calcutta. Thank you, sir. It's my pleasure to welcome Mr. Chalasani, Chief Executive MFI, who monitors Association of Mutual Fund Industries, and you know how it has grown up in this past years. It's my pleasure to welcome Mr. Sashi Krishnan, and more pleasure to welcome all our sponsors. I start from Mr. Amir Saleman from Builders on Life AMC, Mr. Shayad Madan of TCG Advisor Services, Mr. Vaibhav Chugh of Vito Capital Mutual Fund, Mr. Sandeep Srivastava of HDFC AMC, Mr. Mahmood Pasha of BNP Paribas AMC, and of course, our very own Mr. Tanu Sen. Thank you, sir. Now it's a summit, but what we believe, it's a collaboration of our ideas and thoughts, what we are doing and what we are going to do in future, to exchange the ideas of regulators and distributors, and as a chamber, we can bring out of them together to share these ideas on a platform. Indian mutual fund industry, it has crossed 55 lakh crore. Now we have 15 crore plus investors putting money here. And currently, Tier 2 and Tier 3 towns contribute 18% of AUM, a sharp rise from 10% about 5 years back. Thanks to SEBI and MFI, whose efforts have ensured that mutual fund is sold across India, especially focusing on Tier 2 and Tier 3 towns, so that every household of India can participate in India's growth story. Currently, now we are gathering 30,000 crore rupees in SIP every month in mutual industry. And this SIP money has made industry widespread and across every household. One more point of focus which I would like to share with you is technology enabler. If we see how India stacks up, Aadhaar, UPI, and right now, as per SEBI's MFI's jurisdiction, you can start an SIP in only 5 minutes, which was unthinkable few years back. And new startups, Grow, Jirodha, have bought millions of new investors in mutual industry fold. Right now, you can do SIPs from mobile phone apps also. And right now, more than 60% of money is coming from online transactions only. I think Indian mutual industry is evolving now, and with support of SEBI and under MFI's guidance, it will increase much more going ahead in the years. And for that, we have to maintain trust of all our investors, and under SEBI direction, we will be able to do it. Thank you.
Thank you, Mr. Ladda, for your thoughtful deliberation. I would now request our chief guest, Shri Manoj Kumar, Executive Director of SEBI, to kindly deliver the keynote address. Over to you, sir.
Mr. Sen, Mr. Ladda, my partners in this regulatory journey, Director NISM, Mr. Shashi, Mr. Venkat, and Mr. Ladda rightly mentioned that MP should do a monitoring role. Though the CEO was saying that no, that is not our role, but we are eagerly looking that MP should do that role, because it always helps the regulator if somebody else is performing the task at a primary level. So this is the beauty, and I must compliment ICC that in this centenary year they have invited us, and it is a wonderful time to have a 17th Mutual Fund Summit here in the city of Kolkata. All of you know that this city is known for its aggression, particularly in the securities market arena, and we all are familiar. Somebody mentioned from the dais that I think Director NISM mentioned that when he used to deal with the brokers of Kolkata Stock Exchange, he used to have challenges. So, sir, the challenges as far as the industry is concerned, it happens everywhere, not only in Kolkata. It may happen in any particular exchange and with respect to any of the brokers. But you would all have noticed that over a year, we as a regulator have tried to lessen the burden. And from that perspective, we have created many regulatory frameworks which should help industry to grow. So I would highlight the key initiatives which have been taken, particularly three great initiatives from a regulatory perspective, which has really transformed the way securities market has functioned or has emerged in this country. And as first initiative which happened long time back, if I recollect correctly, in 1998 onwards, is to reduce the settlement. And you mentioned that settlement used to take a longer time, but if you all recall that we were probably the first jurisdiction in the entire world which ensured that the entire trading should happen in an electronic environment. And this happened in 1998. And credit goes to all the participants all the exchange, all the brokers who came forward and they adopted the technology. So you were mentioning about the technology adoption. So that started 1998. And that's why wondering when you mentioned that whether NISM will remain. When we did this journey in 1998, we were also wondering whether regulators will remain or not. But thankfully, we have survived 37 odd years as a regulator. So that was one of the critical journey, and it changed the way the industry or the securities market has emerged in this country. Another significant development which happened was the dematerialization. If you all recall, we all used to grapple with the physical shares. And when we embarked on this journey somewhere in 2000 to have dematerialization, and today we are probably the only jurisdiction where we have 100% dematerialization happening and trading is happening in a dematerialized mode. So this is a significant achievement because seamlessly with the help of technology, we are now able to do any transaction from anywhere in the country. And dematerialization is one core pillar for that transaction. And now the third biggest revolution which is in process, and that is the mutual fund journey. All of you have gathered for this summit, which is rightly and timely focused on the journey of the mutual fund. Previous speakers have already burdened you with the exhaustive data sets surrounding the mutual fund. So all of you know where we stand in terms of AUM, where you stand in terms of SIF. So I will not burden you, though my speech has certain contents. First 2-3 pages are really full of those statistics, but I will not bother you about that. let me share with you that going forward, what we are going to do. Because when we come and when we are fortunate to share dais with such a luminaries, they will sometimes indicate that regulators has done a fantastic job. But probably we are not truly satisfied that what type of job we have done. So we keep on doing something new. And from that perspective, we have taken many initiatives. For example, MF Light is one area where we thought that let us try to lessen the burden of the industry as a whole. All of you would have heard recently, SEBI chairman has indicated that we are moving towards a direction of optimum regulation. So you all may be wondering that what exactly optimum regulation means. Even we are also trying to balance that what it really means. But let me clarify, and this clarification came very recently, that optimum regulation is nothing but to balance the expectation of the industry and the regulator and the investor. So what you will see over a period of time going forward is that we will try to create balance between what is expected out of the regulations, what industry is expecting to grow, and how we can facilitate. From that perspective, we have already started making a comprehensive review of mutual fund regulations. As practitioners of mutual fund, you may be knowing that probably this is one of the lengthiest regulations in entire set of SEBI regulations. So we are going for a very comprehensive review, and the purpose of the review is to ensure that we create a framework which is more conducive for the growth of this industry. And why I am mentioning is, in spite of the fact of 72 lakh crore or AUM, SIP is all-time high at around 28,000 crores. But still, we are not happy with the growth. And reason is that in terms of penetration, we are still far behind. And I will give you one single data point which will indicate that we have around 5 crores odd investors. So just imagine a country of 140 crores. 5 crore is not a very big number. And to increase this number, we need your support, because unless you as an industry practitioner, particularly the distributor community and the other players of this securities market ecosystem, they come forward, we cannot achieve the target of financial inclusion, and which Mr. Venkat rightly pointed out, that we are trying to move from inclusion to well-being. And mutual fund is one vehicle which can definitely ensure that financial well-being of the investor. So I urge all of you that going forward, we need to leverage upon the technology. We need to leverage upon the groundwork which has already been done at a regulator level, at the industry level, so that we can reach to the nook and corner of this country. Because sitting in metros is not helping us in greater penetration. Probably time has come for all of us as an industry to move to different places, because there is a huge expectation from the investors' perspective from this industry. And mutual fund Sahi has really created that expectation, and it has created a huge benchmarking and trust factor also among the investors. So unless we ensure that our reach is extended to the far off places, probably this financial inclusion journey will not happen in true sense. So all of us need to think that in what manner we can start driving benefits out of the technology, because technology is one area which can definitely ensure that you can have a more efficient way of distribution and doing an investor service. So I feel that we need to really think, and these type of summits give us a lot of opportunities to deliberate. And maybe after our session, there are experts who will speak on various other developments. So regulatory review, I am assuring from a regulatory perspective that we are doing it, and it is going to be a very comprehensive one, which is trying to focus on ease of doing business for all of us. When I say ease of doing business, I am not only restricting myself to the industry, I am also restricting and indicating towards the regulatory setup also, because we also want that you should function in a very conducive environment so that our burden is also lessened. If you function in a complex environment, then you create many complexities for us, and then we find it very difficult to handle those issues. So this is one area where we are focusing, and soon you will hear from us. Another area which often we have been indicated by the market players is the regulation 24B. And if those of you who are familiar with this, it provides you an opportunity to engage in certain activities related to mutual fund area, whereas you can give some advisory, etc. From that perspective, there were certain restrictions emerging out of this regulation. We have had a very extensive discussion with all the market participants, including Industry Association of MFI, and we have designed a consultative paper, and formal consultation in this regard will be launched very shortly, maybe by the next week or so. So that will also give a new direction and new flip to this entire industry, because over a period of time, mutual fund industry has developed a core competence, and that core competence of fund managers and the industry experts has to be leveraged for dissemination of other securities market products and also the mutual fund schemes, etc., among the masses. And from that perspective, we will try to open as far as possible without diluting the regulatory core focus. Another aspect which also is under active consideration at our level is categorization of schemes. We often hear that mutual fund industry will come and indicate to us that why you are restrictive in categorization of various schemes. And we always say that our core principle is that whatever scheme you launch, it has to be true to label. And how it has to be true to label, since we were not knowing what to do, so we said that we will permit certain categories. But idea is not to restrict. Idea is that whenever you go with a particular scheme, investors should be in a position to understand that scheme. If you don't make the scheme simple, if investor is not able to understand the scheme, what is the objective of the scheme, then I am sure that there are a lot of mis-selling complaints, and we are very much worried about that. So that's why this categorization was done. We are actively reviewing it from a perspective that it should be made more simpler. That is number one. Number two, how industry should have more freedom in launching new schemes. So I am sure that once with this co-creation with the industry, we bring more clarity surrounding various categories of the mutual fund, it will truly help in greater penetration, because simple product should be in such a manner created which should be understood by each and every one, because तभी वो mutual fund सही है का जो logo है वो it will become more effective. You would have heard that recently we thought that there is a regulatory gap. That's why people are doing many unauthorized activities surrounding certain portfolio management activities. So we thought that let us try to plug it from a regulatory perspective, and that's why we brought in this SIF. We have given many approvals to many of the funds for launching SIF, and shortly you will find that many mutual funds will launch this product, which will truly bridge the gap between the requirement of 10 lakhs and 50 lakhs And I'm sure that the way people may be wondering that why we allowed only mutual fund to launch this type of product. The answer is simple, that we feel that mutual fund in terms of governance standards, they are at a different footing. The reason is because they deal with lot of retail flow, and whenever there is a retail flow, we are always very conscious about the governance. We don't want to compromise on governance and risk related frameworks. So that's why we have allowed mutual fund to launch SIFs. In this when we were doing this, we often heard many grievances from our PMS industry players as well as AIF players. So let me assure them that uh, we have opened our registration process to PMS as well as AIF. And when I say open, what I mean to say is that the registration journey is very faster nowadays as far as mutual fund is concerned. You indicated that we have 46. By the time I will go back to Mumbai, you will find some 2-3 more approvals are already there. So you will see the announcement surrounding that. And why this is possible? Because we have created various differential structures in the mutual fund industry. We have said that if you want to have only passive funds, you can have an MF light structure, which is less burdensome, because in passive not much is required as far as risk related issues are concerned. So you can have a lesser structure. Similarly, we have done some changes surrounding the structure of mutual fund sponsor, mutual fund AMC. All these structures have been clarified further, so that any type of entity which is able to qualify certain eligibility requirement should be onboarded as a mutual fund player in the market. So that's why you are seeing that number of approvals which are happening in the mutual fund space is increasing day by day. And we truly want that there has to be more competition in the industry. It is not to destabilize the established players. I am seeing red logos of HDFC here. So they are and many established players are the sponsors of this event also. So the idea is not to destabilize them. Idea is to enhance the reach and competition in this industry, so that we can go out of established cities and go to different places. So from that perspective, nobody should feel that any regulatory change is going to harm anybody. We always believe in peaceful coexistence of each and every entity, and that is what our approach has been over a period of time. And let me share with you that since we have announced this norms for registration and the approach for registration, we have got around 10 PMS players who have approached us for license as a mutual fund. Similarly, many brokers have also approached to have a license as a mutual fund. And we have accorded certain in-principle approvals to certain PMSs also in a recent past. So no player in the industry should be worried. There is enough scope for each and every player, because we need more players. We need more well-governed players in this entire ecosystem. And we also mentioned about the stress test. There was certain apprehension surrounding stress test. See, stress test is nothing but all of you know that we are a disclosure-based regime, where we believe that we should ensure that there are disclosures which are in place, and investors should be in a position to see those disclosures and take a judgmental call on their investment. From that perspective, sometimes you will feel that we are too cumbersome, and that is what little bit apprehension was happening when we announced the stress test related to mutual fund mid cap and small cap. And when MFI CEO was articulating, I was getting the sense that probably disclosures are a little bit cumbersome, and that's why he was highlighting this point. So in every meeting, we take a note of that, and we always try to lessen the burden. Initially, all of you may feel that what we are doing may not be right, but trust us that over the last 37 years, we have done many right things, and that's why we are seeing such a fantastic and fabulous growth. Nothing, not to say that we have not done wrong things. See, all of us are prone to do certain wrong things, and why I'm saying is that more than us, because when we do certain wrong, we will try to restructure ourselves very fast and correct it. But as an industry, you should be worried, because if you do certain things wrong, particularly in the mutual fund industry, then you have two challenges. First challenge comes from the trust erosion from an investor perspective, and second, naturally, you give us a chance to intervene, and when you give a regulator a chance to intervene, then your journey becomes a little challenging. So I urge all of you that you give us less opportunities to intervene, because in you will have ample time to do business, and there are trust me that there are huge scope for people who do right kind of business. And we all have seen in our association with this securities market that we do better when we all do a right kind of business. And I'm sure the way this AUM has grown, and we are still very far behind as far as global standards are concerned. So hopefully, from this land of Calcutta, though people say that this place struggles, but I am coming to this place since 1996 when I joined SEBI, and I had a wonderful time visiting this place. Not to mention challenges, because all of you know that many challenges we have faced from this place, but the innovation, the idea, and the energy which we see from places like Kolkata are truly admirable. And I am sure that in this centenary year which ICC is celebrating, Kolkata will give us many more reasons to cheer. You will definitely regroup this entire city in such a manner, or the state of West Bengal in such a manner, that we see more penetrations happening as far as mutual fund industry is concerned. And probably this is the launching pad for our entry and foray into Northeast also. So I am sure that all of you will help us in this journey. Now probably all of us have exceeded our time, and our speakers may be wondering that when we will end, so that they can truly give you a better perspective and more practical perspective surrounding this growth of mutual fund industry. So friends, with this, I thank you, and I compliment all of you that you have gathered here. You have given us a chance to interact with you, and we wish you all the best for this entire success. Thank you.
So that was truly a keynote address, touching all the aspects of today's summit. Thank you so much for traveling all the way from Bombay and attending this. We can take 2 or 3 questions maximum. Can someone pass on the mic? Mic. Sir.
My name is Dilip Kumar De. I am industries more than 4 decades. I am the founder of Lokshmi Finance Traders. We're doing the fixed deposit, bond, government bonds, 54 EC bond, etc. And also I have a Calcutta Stock Exchange. And now I think matter has been settled, because last few years that a sub judice matter, I hope that matter has been settled by the court with SEBI. So I hope that SEBI also take appropriate steps that we should back either return my money, security money and other thing, or they can start the business trial. SEBI, actually I thanks ICC, that Mutual Fund Summit, and especially Mr. Sen and Mr. Ladda rightly pointed out, we have to congratulate, you are congratulate because SEBI and MP and actually their efforts mark our mutual fund industry grown substantially. I think 1925 May, our AUM is more than 72 trillions. So at another point is that in 2013, you have introduced direct scheme. In that time, you are saying that all the MCs, not only for regular, they also have to have the scheme, regular scheme, regular plan. But I am requested that SEBI and MP that some of the mutual fund may come only for the direct scheme. But as per SEBI direction of 2013, all the mutual funds should have both the scheme and investors should get the benefit either from the direct or from the regular, and MFD should not be deprived. I don't know when the MP has issued our ARN certificate for the business of mutual fund distributions, so we should get the opportunity. And I don't know whether it is a professional misconduct or not, that if they not allowed the scheme, the regular scheme. Thank you, sir.
I think we are expecting some specific questions, or do I move on to the vote of thanks? Because this was not a, anyways. Any other questions? One question we'll take. Sir, please introduce yourself, and if you have a question, please ask.
My name is Gautam Kormakar, founder chairman of WICA. On behalf of MFD fraternity, I ask to our guardian, MP and SEBI. The Geo BlackRock is coming. They are, which we are saying that they are coming as a disaster for our MFD. Please take care. Just few minutes back, I have shared 3 YouTuber video, which is Mr. Chelsani. Please share, Mr. Manoj sir. The YouTuber is showing that MFD business is crime, like this. They are showing. Please take care. Please take care.
Please.
Yes.
So, see, that is what the point I was highlighting when I was speaking from the dais, that nobody should feel threatened. See, we all have seen so many years of journey, and whenever a new thing happens, everybody says that there is some threat. And that's why I made it a point to highlight that how when we started electronic trading, everybody felt that it is going to finish things in the country as far as trading is concerned, because we were used to a ring system. Similarly, when we did dematerialization, there was a lot of apprehension surrounding that, right? Because everybody was worried that no, this is not a right kind of reform. So trust us that whenever we onboard a player, we do a lot of due diligence, and our perspective is very simple. We want everybody to grow, and you will see this over a period of time. That's why when I mentioned that we want more and more AMCs to come, the reason is that we don't want monopolies to happen. We want that if you have large number of players in the market, this will really and truly help in the growth of the industry. So don't be worried. And last point, we request all of you, don't go by what YouTubers say, because we are very worried.
But sir, all investors are saying.
Mr. Kormakar, let sir finish,
I
please.
will. See, our true urge to all of you is that go to the trusted source of information. There are enough trusted source of information from SEBI website, from MP website, from other AMC's website. Go to those and see that. And that's why you would have noticed that we are very active in taking action against these influencers. And reason is that we don't want any misguided information to float in the market. So my sincere request to all of you is that go to the trusted source and do your due diligence before exercising any judgment. Thank you.
Thank you so much, sir. And before I propose a formal vote of thanks, ICC social media team is active on LinkedIn, Facebook, and YouTube. The links are there. Request you to kindly connect, join, share, comment, like, and what other things are needed. So you can also tag us when you visit this. The links are given here. And now I'd like to propose a formal kind of a vote of thanks. Distinguished guests, ladies and gentlemen, I'd like to take this opportunity to sincerely thank the eminent guests present here for enlightening us with their valuable insights. It is a privilege to be able to deliver a closing vote of thanks at the end of this very engaging and enriching inaugural session here this morning. I am Shantan Majumdar. I am from ICC. I am heading the BFSI team. I'd also like to extend my sincere thanks to our Chief Guest, Sri Manoj Kumar, Executive Director, Securities and Exchange Board of India, SEBI, for being present here today despite his busy schedule. My special thanks goes out to our guest of honors, Sri Venkat Nageshwar Chalasani, Chief Executive, Association of Mutual Funds in India, that is AMFI, and Sri Shashi Krishnan, Director, National Institute of Securities Market, NISM, for his presence. I'd also like to extend my sincere thanks to Mr. Arun Ladda, Co-Chairman, ICC National Expert Committee of Capital Market, and Director, JR Ladda Financial Services, for joining us. Just a couple of things I'd like to mention. New product development in mutual fund space needs to match customer profile requirements, return expectations, and risk appetite. The advancement of technology in the wealth management business has revealed more accessible answers to complicated fiscal difficulties in the whole financial landscape. Mutual fund industry needs to target an increased share of the retail investment through expanding the line of innovative mutual fund products, which speakers have already highlighted. And the escalating digital penetration and the proliferation of user-friendly online platforms have engaged unprecedented convenience, enabling investors to seamlessly access and engage in the mutual fund investment. And also India's rising millennial and youth demographic presents a vast opportunity for the mutual fund industry. The adoption of fintech solutions will not only enhance accessibility and convenience, but also redefine its landscape. And these are the couple of things I thought is relevant for the entire industry. That's why I shared. And now my special thanks to our gold partners, Birla Sun Life Mutual Fund, Aditya Birla Capital Mutual Funds. Our bronze partners, Baroda BNP Paribas Mutual Fund, HDFC Mutual Fund, ICICI Prudential Mutual Fund, SBI Mutual Fund, TCG Asset Management, and White Oak. I'd also like to thank our knowledge partner, ICMAI, and education partner, PGP Academy. And our special thanks also goes to our association partners, Bengal Business Council and ICA. Now, I'd like to call upon, not call upon, he's already there on the stage. So we'd like to felicitate our distinguished guest. I'll request Mr. Atanu Sen to kindly felicitate Mr. Manoj Sinha at the beginning. That good photo last year. I now request Mr. Arun Ladda to kindly felicitate Mr. Venkat Nageshwar Chalasani. Mr. Ladda to felicitate Mr. Shashi Krishnan also. And I will invite myself to felicitate Mr. Atul Sen and Mr. Arun Latta. Got it? We are not breaking. We'll just do a quick changeover, and someone once can take a bio break, and then we can start so that we can start the next session.
Check, check. শুনতে পাচ্ছ না? শুনতে পাচ্ছ না? বলছি কি কাউন্টারে যাবে? কি কাউন্টারে গিয়ে হ্যালো, শুনতে পাচ্ছ? বলছি টি কাউন্টারে যাবে, টি কাউন্টারে গিয়ে একটা চিনি ছাড়া ব্ল্যাক কফি নিয়ে আসো। আমি এখন উঠতে পারবো না, এই প্রোফাইলটা চালাতে হবে। চিনি ছাড়া। এই কানে দাও, কানে দাও, কানে দাও, কানে দাও, কানে দাও। আর বিস্কুট নিয়ে আসবে এক গাদা। হ্যাঁ আরে ওই 8-10টার মতো, ওই চৌকো যে বিস্কুটটা ওইটা, আর ব্ল্যাক কফি, ব্ল্যাক কফি তাড়াতাড়ি।
Hello. I'll request everyone to kindly take your seats. We'll be starting the next session immediately. All the speakers are here. Moderator is here. We'll be starting very soon. Kindly come inside and take your seats. If you want, you can get your tea and coffee inside. So welcome back. Kindly take your seats. We'll be starting our session. First technical session. Reaching 50 crores, transforming nation of savers into a nation of investors. The topic is very interesting, and more interesting are the speakers. Sir, kindly take your seat, sir. Sir, people in the front, kindly take your seats. I'd like to call on stage the moderator of this panel, Mr. Atanu Sen, former chairman, NPS Trust, PFRDA, MD and CEO of SBI Life, and chairman of ICC National Expert Committee on BFSI. Mr. Sen. I'll now call Mr. Mohammad Amir Suleiman, AVP, Investor Education and Distribution Development, Aditya Birla Sun Life AMC, to come on the stage. Mr. Rohit Reddy Gopu, Global CEO, IOTA Technology. Mohammad Basa, Retail and International Business, Baroda BNP Paribas Mutual Fund. And last but not the least, Mr. Sudipta Borman, Deputy Vice President from SBI Mutual Fund. The topic is very interesting. The moderator is an experienced person from the industry, and there is a good gathering in the house. So over to you, Mr. Sen, to conduct this session. Thank you.
Thank you, Shantun. In fact, before we start the panel discussion, I will introduce my co-panelists here. Right from right-hand side, we'll start with Sudipta Borman. Sudipta, can you just introduce yourself?
Hi, hello, good afternoon, everyone. I'm Sudipta Burman. I represent SBI Mutual Fund here. I'm associated with SBI Mutual Fund for over 22 years now. I joined the industry in 2002, and more importantly, I started my career with LIC as a apprentice in 1999. Then followed by that, I joined private banks. I worked with small stints with HDFC Bank and UTI Bank before finally turning up to the mutual fund industry. So that's all about me, and I'm currently heading the national distribution as well as the IFA piece of business for SBI Mutual Fund here in West Bengal. Thank you.
Next is just right of me is Mohammad Basha. He's the head retail and international business of Baroda BNP Paribas Asset Management.
Good afternoon, everyone. Like Mrs. Sen introduced, I represent Baroda BNP Paribas, currently responsible for retail, international business, and marketing function at Baroda BNP. Been in the industry since '96. Most of my professional life I have spent on the side of a table, which is asset management companies. Since 2014, I am with Baroda BNP Paribas. Prior to that, I was with Franklin Templeton and AIG asset management companies. Glad to be here. Thank you.
Thank you, Mr. Basha. Mr. Suleiman. Yes.
So my name is Mohammad Amir Suleiman. So I've been working in this industry since 2008, mutual fund industry. Prior to that, I had an experience of debt market and life insurance. So altogether, I've been working for professional life for last 25 years. Currently, I'm with Birla Sun Life, Aditya Birla Sun Life Mutual Fund, working as Assistant Vice President for Investor Education and Distributor Development. Before getting into the discussion, let me first thank Atanu sir for giving an opportunity to be here with you, and I would also like to thank ICC for their centenary celebration and for their 17th Mutual Fund Summit. Over to you.
Thank you, Mr. Suleiman. We have Mr. Gopu, Mr. Reddy Gopu, Mr. Reddy Gopu is an IT expert.
Yeah, I've been an entrepreneur for the last 2 decades. All my life been an entrepreneur. Currently, I run a deep tech AI and cloud consulting firm based out of Dallas, US, and also another InsurTech and BFSI focused boutique consulting firm with HQ in Malaysia, and we operate around 10 countries within APAC. I've been a technology entrepreneur for all my life. Looking forward to the panel today.
Great. So before we start the panel discussion, I would just like to give a little bit of an industry overview. A lot of it has been discussed in the morning sessions with the regulator being there, NISM, and also AMFI. But the growth, AUM growth is humongous, 19% of Indian GDP at this point of time. But as was mentioned, most of the developed countries have an average GDP AUM to GDP of around 60%, and with USA it being more than 100%. Having said that, amongst the AUM of the mutual fund in India, the equity constitutes around nearly 50 lakh crores, whereas debt is around 15 lakh crores, and liquid is the remaining of the 72 lakh crores that we have today. The equity market outlook also, if you look at it, the 10-year real return, it has an average level of nearly 7% or greater than 7%. And across the globe, we are seeing, global risks are going up. US policy, fallen dollar index, all this are leading to foreign inflows or outflows. And in India, we have a good current account balance. And if you look at it, in the global perspective, there is a diversification away from the US dollar and reserve, and no US exceptionalism is at this point of time there. I wouldn't mention about the AUM growth that has taken place in India. In fact, we had discussed right in the morning, we had discussed in detail. But what are the growth levers that we'll be discussing today? In fact, of course, the retailization, the sachetization that we are talking about, the expanded footprint in B30 or beyond, then the digital penetration and the technology that is we'll be focusing upon. And also in the digital penetration, whether it is direct to customers or otherwise, app portals. In fact, Mr. Reddy would be able to help us on that. And product innovation for the customers, of course, and how it is being done, the investors, how they're taken care of. Role of technology, definitely, as I was mentioned, digital, and it is opening a gate. It is the gateway to accessibility to the mutual funds. And in the morning, there was a discussion about artificial intelligence, robo-advisors powered by AI and ML, that is machine learning, and also the role of the distributors today with this AI and ML coming into play. Having said that, let us have a few, delve deep into the matter. Sachetization, product innovation, digital penetration, and educating investors about the risk. In fact, in the morning, Venkat Nageshwar was speaking about risk and education, and they go hand in hand. First question, basically on the, the industry overview and kind of product innovation and sachetization. Let me start with Mr. Basha, since he's right besides me and next to me. India's mutual fund, AUM is still only, as they were mentioning, approximately 20% of the GDP. And globally, it is much more. So from an industry standpoint, what do you believe is the biggest hurdle in transforming the savers into investors here?
This 19% number, what we talk of industry size as a percentage of GDP, is like a glass half filled. If I'm an optimist, the way I would look at is that we have made a great progress from where we were 20 years back. For those who have been in the industry would know that in 2005, the industry size was about 150,000 crores. We are currently sitting at 72 lakh crores, which is a 50 times growth in 20 years. So a lot of reason to celebrate. But if I have to look at from another angle, we are still 19% still look decent. But look at the number of people who are in mutual fund industry. We have supposedly more than 50 crore PAN, but unique PANs in the industry is about 5 crores. So we are 10% penetration out there. So there is a huge potential. What can help, or what is stopping savers to convert into investors? Because traditionally Indians are savers. We are a country of savers. At a household level, we still save about 21-22% kind of earnings. If I have to put it in simple terms, it is one underestimation of inflation and how it impact one's lifestyle eventually. People, you ask any average investor, what do you think you would be spending 25 years from now if you're spending 1 lakh of rupees? I don't think anyone would give you a huge number. They would think it'll be 2 lakh or 3 lakh rupees. So people tend to underestimate the kind of impact inflation has. So they're happy being savers out there. Second thing is, people also underestimate the power of compounding. While we all, being part of this industry, knows power of compounding is the eighth wonder, but not an average investor think that if money grows at 12% per annum for over 25 years, it can be 64 times what it is today. So these are one side, that people underestimate the inflation impact, underestimate the power of compounding. On the other side, they overestimate the impact that risk would have on portfolios. People think that the risk of investing in capital market products is far more than what it is actually is. So to summarize, it's underestimation of inflation and power of compounding, and overestimation of a risk is what deterring savers to convert investors.
Thank you, Basha, because you have really hit upon the specific hurdles that are there to convert the savers into investors, especially in the mutual fund space. Let me go to Mr. Suleiman. Mr. Suleiman, in fact, we are mentioning about how to penetrate, how to convert savers into investors. So sachetization is being spoken today. And what is sachetization? It is a minuter version of the SIPs that we have today. And they're speaking of sachets of as low as rupees 250, and also, making it specific guidelines and how to, penetrate with sachets across the industry. So it is often mentioned as a strategy to deepen market penetration, right? So how feasible is sachetization of mutual funds, and what form could it take beyond SIPs? SIPs were 500 rupees and more. 250 rupees, small sachets, many companies in other industries have done sachets and have penetrated rural markets or semi-urban markets or beyond B30 also. So how, in the mutual fund space, how do you expect it to be done?
So as you rightly pointed that sachetization has worked very well for other industries when it comes to FMCG industries. So there was a revolution which has happened in the FMCG industry. If you remember, there was a 1 rupee shampoo sachet which was there. And that revolution has led to the deep penetration. And because of that also, you can always, take your premium product deep down to the market. Even if it is premium, you can take it deep down to the market because of the sachetization. And that is what has happened in the FMCG industry. So when it comes to financial services industry, sachetization is already happening through SIP. As you rightly said, it is happening through SIP. Now, you would have seen it started with a lower ticket side of SIP, and now the average ticket size has gone up. and not that the minimal ticket size of 100 rupees SIP was not there. It was there, but then you also talked about the feasibility of that SIP. So industry might be having good SIP numbers, the total monthly accretion of more than 26,000 crore is there. Now it's a well-established fact. It's a chota packet bada dhamaka because it is providing stability to the capital market. But still, that 100 rupees SIP were not getting propagated. It is because of the feasibility and the business dynamics which has not worked well with that. So it has to be, it has to be feasible for the industry also to take it forward to the last leg or last miles of the investor. Now, what had happened? I would, especially like to thank SEBI for coming up with this circular of Choti SIP, that is to the tune of around 250 rupees. Now, you can have a question that when there was an existence of 100 rupees SIP, whereas it has not worked, what is that going to happen with this 250 rupees SIP? Actually, it has standardized the template. 100 rupees SIP was not there with all the MC. But when it comes from the SEBI, the standardization of 2,250 rupees is there. Apart from that, what it is doing, it is making feasible. And feasible when we consider all the parties involved, all the stakeholders involved. Who are the stakeholders? The AMC. So it is becoming good for AMC because of various reasons. All those who are there who would have gone through the circular might be knowing. It is good for investor as well because it is somehow not affecting the investor on the cost side. And it is also good for the distribution fraternity where some revenue generation is happening. So feasibility for distributor, feasibility for manufacturer, and the feasibility for the investor as well. And personally, I would like to thank SEBI for bringing this to the table so that it can be on a feasible way, it can be taken forward to the last mile. And how it is going to happen is obviously because of the distribution, and we all are sitting here as a distributor can take it forward to your investor. Apart from that, there is a lot of digital penetration which is happening. And so far as the innovation in this category, as he rightly put out that what innovation can come in, so it could be the next leg of jump can happen from the goal-based sachet. So it could be a goal-based sachet for free some important goals, which could be retirement, which could be education, or which could be say housing. So these sachets can come in play on a goal-based template. And also there can be a event-based sachet which can be produced, that if you are doing some online buying, some payback can happen and it can go to your sachet of education. That is how there's a lot of innovation that can be done in and around the goal-based templates, the event-based templates, and with the help of technologies.
Excellent, Suleiman. In fact, we'll go into other areas like what are the risks, what are the, where education, how do you go into investor protection and awareness and all that. We'll go into that subsequently. But Sudipto, in fact, how do AMCs, you are with the SBI Mutual Fund,
Right.
How do SBI Mutual Fund or the AMCs in general balance the need for financial inclusion with the risk of mis-selling or even under-education?
Well, mis-selling or under-educating, see, it's a critical, challenge, which definitely AMCs as well as the regulator, is facing and taking it forward. It's a learning through, process that we are adopting. But definitely when we talk about, mis-selling, so there are regulations which are there already, laid down principles of, principles to be followed by mutual fund distributors. There are enforcements. For example, there are suitability assessments for your, investors based on age, risk profile. So there are multiple products which can be recommended accordingly. More importantly, even the regulator has laid down certain code of ethics for the mutual fund distributors. So when mis-selling comes in place, so definitely there are regulations and strict, robust regulations, I must say, which prevails with our industry, and enforcement is also very strong into it. But when we talk about definitely learning curve of the investors. So here, definitely there are other, laid down policies, other principles that majority of the, industry is following. We, alongside AMFI as well as SEBI, we have taken up initiatives like investor awareness program. I mean, like the way the flagship project of AMFI, the mutual fund Sahi Hai campaign, running those, running ads between overs of a T20 match or maybe one day cricket, has popularized, the concept of mutual funds so simply within the, remotest of village, where people have actually, started understanding that mutual funds are actually investment products and no more cheat funds. Because being associated with this industry for over, 2 decades, I still remember when we used to interact with investors, explaining them about mutual fund products, investors barely had an understanding about what this particular product is. They used to confuse us with, cheat funds. Thankfully, the unearthing of the cheat fund scheme here in, East, I must say, had helped us a lot to, actually spread the awareness of mutual fund product. So this is a way, how mutual funds are, addressing to this, learning curve. And more importantly, not just this, I would also say that, the digitalization of such investor education. I believe I have seen many mutual fund distributors, forget about, AMCs coming and participating into it, but even smaller mutual fund distributors taking, help of AMCs and trying to, make small reels which will be informative about, different products, about the concept of compounding, about the concept of SIP, about, how mutual fund can, generate alpha, how it can, beat the inflation. So these particular things are actually there already in place, and that's how, I believe, fintechs are also taking active participation into it.
Excellent, absolutely. You mentioned about how you are penetrating the the underserved areas, especially the beyond B30 areas, and you mentioned about digital penetration. Now let me seek or pick the brain of Mr. Reddy. See, digital platforms have made investing easier. That is one thing. But B30 penetration remains a challenge. So, what are the key digital barriers you have encountered, and how are you solving them? And along with that, any recent, product innovations designed specifically with B30 investors in mind?
So, see, the first thing is, I think, hyper personalization. In fact, in the morning when the director of NISM was talking about hyper personalization. So, in B30, what matters most is going vernacular. You have to go very language specific and region specific, and you have to deliver the content in vernacular, very hyper personalized way. So, a couple of examples of what's happening on the tech innovation on the product side is like, as Suleiman mentioned, the goal-based packaging of the same product. Like behind the scenes, it could be still the same mutual fund, but on the top, you can say that, traditionally, most of the families used to save money to buy gold throughout their life to basically for a daughter's marriage or, for some housing or something like that, right? So doing that same thing in a very vernacular way, wherein you have your native apps where customers can basically figure out, tell you what their goals are, and then based on that, you suggest them what is the most suitable, investment size on a monthly basis, and making it flexible for them. Because if we are used to buying gold when we had money, it was not like, okay, I was going and buying it on the first of every month, right? So making it more flexible in a way that it's kind of going to from a very first principle approach of how India saved money all this while. Now with technology and bringing in the vernacular part of it, makes a lot of difference. Second thing is when you have your on-field teams, the distribution teams in the B30 cities, you can now empower them with co-pilots and assistants, which can basically sell them better, and you can avoid a lot of mis-selling. Rather than they going, your investors going and using ChatGPT, you can actually provide more accurate information, via chatbots or digital avatars. Third thing is, I think you can produce content at scale, which is very hyper personalized, because now the customer profile. You can actually tailor-made the content and send it to their WhatsApp, right? So that's quite possible at scale. And omni-channel, right? So making it that when your advisor is going and meeting someone today, you can as much send a lot of information even before your advisor is meeting that person. So all of these things, when you make it omni-channel using technology and the LLMs and the chatbots, co-pilots, and making it very seamless would make a lot of difference. And I think the key that will make a lot of difference again is hyper personalization and going vernacular.
Great. I'll come back to you. There are many, specific, points or areas that you have mentioned. But let me go to Mr. Sulaiman once more. So there is a deep, cultural preference for guaranteed returns in India. So how do we shift this mindset in favor of market-linked investments? Regarding guaranteed, if you look at, bank deposits, FDs versus the mutual fund, well, FDs, there is a certainty of return. Of course, there is less liquidity, but it's comparatively risk-free unless the bank goes down under or something like that. Whereas in mutual fund, there is a likelihood of higher returns. Why I'm saying likelihood? Because over a period, it has been seen that mutual fund over 10-year, 15-year, 20-year period has given much higher returns than bank deposits. There is a risk factor, market risk, as well as how do you look at it from this mindset that is there between guaranteed, even in insurance, you have guaranteed products. So is there a deep cultural preference, and how do you shift this mindset?
So the shift in mindset is actually happening. It is not that it is not happening. So it is all about experience. Once if somebody, whosoever is the investor, normally comes in first time with the handholding of either the distribution fraternity or from the recommendation from their own colleagues and friends. And once they comes into this industry with all in experience, they continue to progress forward. Now, when it comes to the new investors, there are a lot of people working behind this, lot of educations happening. Even the regulators are working very, very hard to educate people for coming to the industry wherein they can have market related return rather than getting into the fixed mode. Although it is said that it is a fixed, but if you remember or recall the fixed deposit rate of say 10 years back or 20 years back, it has been continuously coming down. So it is not that the fixed deposit is also fixed. It is also changing. Now, if somebody wants to have better, as rightly talked by our earlier panelists who talked about the inflation beating return, now the investor have to be made conversant of what are the important aspect of investing. The important aspect of investing is SLR principle, so which is safety, liquidity, and return. And one thing, if I could add, is the better return. Not that return, it should be better returns. How can you improvise on the return with the reduced risk? And that is how the concept of asset allocation or the concept of risk-adjusted return comes into play. So slowly and steadily, people are, with all education from the SEBI side, from the asset management side, from the AMFI side, people are progressing from fixed mindset to variable mindset to market-related return sides.
Absolutely. See, in the morning session, both the ED of SEBI, Mr. Manoj Kumar and Mr. Venkat, they both mentioned about risk and education, and the phrase that was emphasized upon is trust is the key. So if that is there, Mr. Basha, what role should schools, colleges, or local institutions play in long-term financial education to sort of take care of the fears investors from B30 Towns Express when introduced to mutual funds, basically the trust issue?
I think it starts early. Financial education need to start quite early in schools and colleges. Unfortunately, so far, we start talking about financial education only when somebody is in mid-30s or late 40s. Introducing this in schools and colleges as a part of a curriculum talking about financial planning and introducing basics of capital market products which are there will help understand the risk better. Like I mentioned earlier, the reason why savers doesn't convert as much into investors is because of lack of understanding of a risk. While investing into fixed income product like fixed deposit, it does guarantee you a capital back, but the biggest risk you run in such products is you are not beating the inflation. So eventually your purchasing power is being compromised. So starting that education early would make a lot of sense. That's where schools, colleges can play a bigger role. And from a regulations point of view, if you look at it, SEBI and AMFI have been doing a great job enough in terms of creating awareness in terms of a risk associated with the products like mutual funds. In fact, people joke that your disclaimer in ads is as big, as lengthier as the ad itself. But having said that, I think we need to spend a little more efforts to educate about risk. In the Western world, risk is romanticized. In India, is always seen as a negative thing. I firmly believe the biggest risk we take is not investing. Biggest risk we take is not taking the risk, especially against the inflation. That need to be educated to investor. It has to be done in a very simple language which people can understand. Like somebody mentioned, hyper personalization. Talk in the language which people understand, the vernacular languages or the regional languages. Also, the goal-based products play a very, very important role. So we can popularize those products, because once you start selling, promoting goal-based fund, people behavior will change, and once their behavior change, I think it will help them to manage or help them to accept the risk with those products. So those are my thoughts.
Right. You mentioned about reward and risk. That actually reminds me of, I'm just deviating, of something that happened when I was in the bank. In fact, I was posted in corporate center at that point of time in SBI, State Bank of India, and a chairman in the auditorium of State Bank of India called all the senior officers posted there, deputy general managers and above, general managers, chief general managers, everybody. And he asked, what do banks do? And everybody wanted to impress the chairman. We deal in deposits. We see that the margins are there. We do cross-selling, everything. At the end of the day, nobody was right. The answer was, we deal with risk. We only deal with risk and look at the risks of the depositors, investors, borrowers, everybody, and the risk and reward. Now, let me, move to Mr. Reddy. Mr. Reddy, the tech expert with us. The focus is on digital penetration, access, and convenience. So how do you see mobile-first investing evolving for smaller towns and rural India? And with that, are there any collaborations with asset management companies or government initiatives to improve tech infrastructure or reduce the friction for the first-time investors in the smaller towns and in the B30 beyond?
I think there is very little friction already, because see, everyone uses PhonePe, and they're already being shown this option to invest with 100 rupees or 200 rupees. The problem is, I think, with financial literacy, where they don't understand the underlying logic in as much detail as how they understand gold. So if that education can be improved, I think see, the digital penetration happened thanks to companies like Jio. Internet penetration resulted in a lot of growth. So UPI is a very great success story, right? I think the same can be taken, and the mutual fund growth story can be built on top of it, right? So again, couple of very interesting things that are happening at the B30 level is there is a lot of regional content influencers that they go and watch content from. So how can you basically partner and collaborate with those people and deliver that content with your product or relevant to your product, and build that trust so that they can use their existing platforms and continue to invest. So going and so the platform is already there. They have the mobile phone. The app ecosystem is already there. How do you basically go into their existing ecosystem and play your game is the most important thing. I think that's where I think a lot of distribution companies should now start looking at how can you live in the attention span of where the customer is actually spending a lot of his time, right? So you have to move away from newspapers, you have to move away from TV ads, you have to go into the phone, you have to go into the WhatsApp and give the updates.
Yeah.
Just to add on to this, how the penetration can happen to the B30 locations also is, and he talked about the government intervention. So I foresee it because recently I have been interacting with the Common Services Center of government. So these Common Services Centers are now eligible to sell mutual fund products. So they have got somewhere around 5 lakhs village level entrepreneurs, and they have those digital seva portal. So through digital seva portal, 5 lakh entrepreneurs can take your product not even to the village but the panchayat levels. So that is the kind of penetration can happen with the help of CSC. But the unfortunate part is then again the NISM 5A and all distribution trainings and all is there is a challenge. But at least this tie-up has already started, and they have been impaneling the mutual funds wherein this digital seva portal will be distributing products to the last miles. I mean, to the panchayat level it is going to. I am talking about 5 lakhs. We all together have somewhere around 3 to 4 lakh EUIN. I'm not talking about the distributors. And one side, the CSC themselves have 5 to 6 lakhs village level entrepreneurs. So that is the leg of penetration which is going to happen. Another aspect of government is the ONDC platform. So mutual fund has now come on to the ONDC platforms also. So there can be an amazing change as the regulator and the AMFI, everybody was talking about. It could be a sudden change which you might have not think about. So everything is happening on the ground, but it may take some time. But the change will be much faster and much speedier.
Absolutely. In fact, and the ONDC platform that you mentioned, that's a game changer. In fact, we were discussing right from the morning about the disruptions that are taking place and the speed of disruption, and with the machine learning and the artificial intelligence, the disruptions can be humongous for everybody, right from the investors to the distributors to the asset management companies and even the regulators. Another small, I hark back to my SBI days about disruption. And I've shared it in many other, gatherings also. So I was a junior officer in State Bank of India in Calcutta in those days. And in fact, many of you are aware that SBI started its journey with the Imperial Bank and before that Bank of Bengal from Calcutta itself about 200 years back. And they had a record room in what is called British India Street. I don't know what that street is called now. It used to be in the Dalhousie area. Same name, British India Street. They had a record room there. And since I was posted in the Chief General Manager's department here, I had the key to that, record room. So I used to go there and look at different records. Fascinating. 1870, 1900, what records were there? So in 1900, I found that there was a strike in those days, in the Bank of Bengal days, Imperial Bank days, in Calcutta. The reason for the strike was electricity was coming to Calcutta in the branches. And earlier in the branches, there used to be what they used to call pankha pullers, who used to sit outside and draw these fans. And they were afraid of losing their jobs. And because electricity was first coming into Calcutta in 1900, there was a strike. So similarly, the disruptions today, when artificial intelligence the threshold is on the way in, what disruptions can take place? In fact, before I go to this risk and trust, I will again go back to Mr. Reddy. What are the disruptions that can take place? Just think aloud.
Yeah. So one is, I think, a lot of first-time investors will invest on their own decision using something like a chat GPT. They'll go and ask and, chat with chat GPT and do it, which is already happening. I know at least quite a few of my team members or employees who've bought a term plan or asked for a term plan. A 23-year-old kid coming and saying that, hey, I want to go for a term plan, which is very different than how it used to be. Like, so when you're a 32-year, 33-year-old, you go to a bank, the bank manager selling your term plan versus a 22-year-old kid picking up a 1 crore term plan kind of. It is happening on his own decision making, where is coming from the fintech influencers that are probably doing this content online, and then they go and learn about this on chat GPT and do this. So that's the first level of disruption, where there is going to be a lot of D2C thing. In fact, on the mutual fund numbers, when I was looking at 30% of the growth came from the D2C. But again, the the biggest challenge there, also the threat also there is the withdrawal symptoms are high. Like, if when someone buys through an advisor, the chances that you will hold on to that investment is 22%, and when you're going and buying it directly is less 7%. So one, the D2C will increase massively. Two, I think a lot of kids, younger kids, are teaching their parents that they should invest in these things, right? Very surprisingly, now these younger kids watch a lot of this content. They are getting to manage budgets, right? A lot of kids that are growing up now get some 500 to 1,000 rupees of pocket money, and there are some kids that are starting to ask their parents, hey, can I invest my money somewhere? So these are some of the bold things that are happening. And these are happening primarily because of the fintech revolution, right? Because they start seeing money, they start seeing content. These are all learning patterns that kind of reverse engineer a saving pattern that could kind of trigger the parent and question them in terms of, okay, why did I not invest earlier, right? So that's one thing. Third thing is, you will see a lot more fintech apps that would kind of package and position the savings in various ways on top of whatever it is. So I think SEBI probably should come out and say that rather than saying mutual funds are a risk, you have to probably position it as a better savings alternative, right? Mutual fund sahi hai, but you are saying that mutual fund sahi hai from a perspective of what? Someone else's decision, right? You are saying Rohit Sharma coming on an IPL ad and telling that mutual fund sahi hai, but you're not explaining the underlying logic of why is mutual fund safe or why is mutual fund sahi hai, right? So mera faisla hai, like I should be confident and clear about the decision making. I think that is changing now. So people are going, because of this, they're going and asking, what is a mutual fund? Why is it? Why should I invest? So they are getting financially, much more empowered than an advisor, because when you go to an advisor, you're prepared. You go with a bunch of things that you take from ChatGPT and talk to your advisor with a lot of this information that you're already getting from the foundation models and ChatGPT, which is putting the advisor in a proposition where he doesn't know what his role is to be now, right? So I think distributors probably should empower and upskill these advisors in a way that they can have a counter narrative in terms of how they can coexist with AI. I think that's very important, because coexisting is very important.
Okay, I mean, in accessibility or in on-ground insights, investor behavior, Sudipto, in fact, what are the typical areas or questions or fears investors from B30 Towns Express when introduced to mutual funds? And along with that, how can influencers and educators also play a responsible role in encouraging investing without overselling the potential returns that are there?
The very common questions that we face whenever we are there for any interactive session on awareness programs is is mutual fund safe? Definitely, this is one prime question. And then should I invest? And what is the return that I'm expecting vis-a-vis an FD? So when people start comparing it with a fixed deposit, there comes the challenge. And more importantly, when we see that investors are not aware that mutual fund can be bought without even opening a demat account. People are pretty confused in the remote locations, that they think buying a mutual fund would actually require a demat account in place. So apart from this, many other factors are that investors think that while buying a mutual fund, they are actually directly related to a particular future of a particular company or stock, which may not be the case, because the portfolio has a number of stocks into it. So these are generic fears which we see. And as you rightly mentioned, that how these influencers can, help overcome such fears is what we see these days. I appreciate much of these, fintech platforms. Even I was, talking about many MFDs who had come forward with such initiatives. When you see the, visual learning and the infographics that they have adopted, I mean, like simplifying, goal-based investing, simplifying a simple objective like, your child marriage or maybe your retirement planning are very much there. And more importantly, look into the much advanced, form of investment. I mean, like fintech platform are offering these gamifications on their platform, where you allow your investors to, virtually invest in an, real market condition, and without any actual risk. So this is how these are simulations. I mean, like these are simulators which are being promoted by these fintechs, which actually makes investors, quite savvy with the environment, the capital market, before they, take concise decision, not just to come forward for any, diversified equity, or maybe the initiatives of the regulator coming forward with investments like, SIFs will help, these investors in the coming days in making concise decision.
Right, Sudipto. In fact, we'll have a final round. See, the points of discussion today were sachetization of mutual funds, product innovation, digital penetration, how do you do it, educating investors about the risk. In that, starting from Mr. Basha, what are your final, would you like to, put your concluding points on these 4 points, or anything connected with these points?
In terms of a potential, we have huge potential. If I have said industry has grown 50 times in past 21 years, I think it can, from current level of 72 lakh crores, also can grow at 50 times in next 20 years. So there is a potential. I think what we need to do as an industry collectively, technology will play a big role in expanding, bringing in more new investors. And I do believe that MFDs play a significant role in this. While I'm a firm believer it's going to be a physical model, it's not only going to be as digital. Investing is part science, part art. Science part technology will solve, but art part is where human intervention is required, and MFDs play a critical role. One thing I would wish to see industry doing collectively, maybe we as a manufacturers and MFDs doing, is getting investors ready for investments. One of the biggest pain point today to onboard an investor is KYC. So today, digital adoption in the country, even in the smallest village, is very, very high. Look at the number of UPI transactions. But why the investor is still not comfortable going and doing an investment transaction digitally is because he is not aware of the process. It's quite lengthy. Can we run a campaign like once when Aadhaar was introduced, the government mission was to have everyone an Aadhaar number. Can similar initiative, maybe government or in collaboration with the industry, get every eligible Indian investor KYC ready, investment ready? And then whoever reaches out, whether it is digital platforms or MFDs, that biggest hurdle is taken care. So if there is one thing I want to advise, I say that let's have those camps and make everyone investment ready. Whenever they decide to invest, that hurdle is crossed. Yeah.
Right. Suleiman, any additional points?
Yeah, so I personally believe that, while, Mr. Vinod also talked about that we are still very underpenetrated to the tune of, only unique investor of 5.5 crore, whereas we have the population of 140 crores. So how will we attain the journey of, reaching out to the masses? And the only way it can happen is to build a proper ecosystem, where I should say it should be most trusted ecosystem. When we talk about the digital platform or the tech stack is there, the distribution fraternity as a stakeholder is there, the regulator as a stakeholder is there, asset management company as a stakeholder is there, and then the finfluencer or the educator and plus the regulators or AMFI leading to the education part. So it is whole ecosystems mean education, technology, regulation, each has to work together so that we simplify it to the extent that simplification plus affordability can reach to the scalable fact. So simplify your product, make it affordable, bring on to the ecosystem in one place wherein it is far easier for onboarding the customers, and then obviously leapfrogging the journey of taking more customers onto the foray. That is what we are talking about, 50 crores customers.
Succinctly put. Mr. Reddy?
Yeah. So leverage AI to go paperless, like take your entire customer journey map and figure out where AI can play a role at each and every single step. Like if people can just upload their Aadhaar cards and they don't have to fill an application form today. So one, just map your customer journey and use AI at every layer and start figuring out how to coexist along with AI, because AI is already existing with your consumer. You just have to go and reinvent yourselves and coexist in the whole ecosystem again.
And last but not the least, Shudipto.
Yeah, what I just will take cues from Basha. What he just mentioned was, the first 10 trillion, if you see, for the industry was built up over a period of 50 years. The next 10 trillion was built just over a period of 5 years. And just imagine the last 10 trillion that we have built. It's over a period of just 6 months. So this, industry is definitely on fire. This is what I must say. And the way I have seen this industry grow despite multiple disruptions, I mean, there are concerns right from the morning. I hear majority of the concerns coming from the MFD fraternity, but we shouldn't be forgetting that the first disruptions, as Atanu sir had just mentioned, that in 1900 he was mentioning about a strike that went on. So we had witnessed the entry load ban happening in 2008, right? But the industry had grown from there. Then there was the introduction of direct scheme. Definitely the industry boomed from there. And today, I see this industry growing. Why? Because just as Basha mentioned, the total number of PAN holders, roughly around 50 crores. I'm just saying that how many people file income tax? Are we able to reach them? The number that Basha gave was around 5 crore, unique PAN. And the number of income tax that has been filed last year was close to 8 crore. So we are not able to even reach the people who are actually paying taxes and who are our target segment. So this is where, and the kind of digitalization that has happened, which I get to learn when I go multiple places today. If I talk about my AMC, you can open a folio in less than 5 minutes. Onboarding a client can happen less than 5 minutes. I mean, opening a KYC and then opening a folio will take less than 5 minutes. So anyways, so these are happening, and sachetization, as Atanu sir has just said, I just would like to take it up that in a quarter we have added around 1 lakh SIP to 250 rupees SIP in just a quarter, and so definitely the industry is on fire, and we are here to grow, and 100 lakh crore is just a leap away. Thank you.
Thank you, Shudipto. Thank you all the panelists, Shudipto, Basha, Suleiman, and Reddy. In fact, I should thank the audience also just before lunch. They have been all very attentive. I don't know, because that's an issue. Thank you, everybody. With that, I think...
kindly felicitate our panelists in the panel discussion. And for the audience, the ICC social media handles are flashing on the screen. Kindly like, share, comment, tag us, collab with us for this. Thank you. Pallavi, please get the felicitating. Felicitation. Pallavi, please. We'll request Mr. Atanu Sen to kindly felicitate Mr. Bachra. He has a flight to catch. His flight is preponed. He is one of the very lucky persons, one of the most lucky persons. His flights get, postponed. His flight is preponed. Thank you, sir. Now I'll request Mr. Atanu Sen to kindly felicitate Mr. Mohammad Amir Suleiman. Mr. Sen to felicitate Mr. Rohit Reddy Gopu. Sir, we'll take a group photograph, sir. Please wait. And finally, Mr. Sen to felicitate Mr. Shudipta Borban. I'll request all the panelists and the moderator for a group photograph, please. Sir. We have one more session before lunch, so kindly be seated. We'll immediately change. Please don't leave the room. Thank you, sir. We have a very interesting panel coming up. It's investment in mutual fund, traversing market volatility. And we have a very good moderator and very good panelist for this session. Let's do the changeover very fast and we'll call upon the panelists along with the moderator. I would call upon stage Mr. Anindo Palchoduri, CEO and founder of Wealth Up Group, and who is also moderating this panel. Mr. Palchoduri, please come on the stage. I would now like to call Mr. Gaurang Ganeriwal, Zonal Head, East ICICI Prudential AMC Limited. Mr. Sandeep Srivastav, Regional Head, East HDFC AMC Limited. Mr. Kaustav Bhattacharya, Zonal Head, West and East TCG Advisory Services Private Limited. And last but not the least, Mr. Vaibhav Chuk, Director and Head Sales, White Oak Capital Mutual Fund. Welcome, gentlemen, and I'll request everyone to kindly take their seats, please. We are starting the next panel. Sir, please take your seats. May I request people at the back to kindly take their seats? We are starting the new panel.
Hello.
So over to you, Mr. Palchoduri. Thank you.
Thank you, Shayantan. Can I please request the audience to kindly settle down? I know some of you must be hungry, and we shall try and ensure that our panel doesn't prolong too long. I and my co-panelists shall try to be brief. But if you can't, if you don't settle down, I don't think we'll be able to start. Thank you. A very good afternoon to all of you. I think it's a beautiful Saturday. Today happens to be World Yoga Day, World Music Day, and we are having our 17th Mutual Fund Summit. And if some of you are here since morning and have been enjoying and liking this program, I think a big round of applause to the team led by Shayantan, Pallavi, Smita, all of them under guidance of Mr. Sen. They have put up a lot of effort they have taken to put up this show. So I'll come straight to the point. Our topic of today's panel is investment in mutual fund traversing market volatility. As we all know that mutual fund have emerged as a powerful tool for long-term wealth creation. However, market volatility, while inevitable, can test investors' confidence and lead to poor decision making. Our discussion today will focus on strategies to help investors stay on course, with insights on how to effectively manage mutual fund portfolios during uncertain times. I would request my panelists to give a quick introduction. We'll start with Gaurang. Yes.
So, very good afternoon, and I'm Gaurang Daneriwal, and I'm with ICICI Prudential, working as a zonal head for Eastern region. So it's been long, and a lot of you know me also, so it's been like good 18 years with the company.
Sandeep.
Hello, good afternoon, everyone. My name is Sandeep Srivastava. I am working as a regional head for East for SDFC Mutual Fund. I am associated with SDFC Group for last 22 years. So been to different places, different zones, and I am working in East for last 2 years. Thank you.
Okay, Vaibhav.
Yeah, good afternoon, everyone. My name is Vaibhav Chug. I had sales for White Oak. I have been with White Oak since the time we got mutual fund license, and have been in the industry, fortunate to have been in the industry for last 22 years. Started with Kothari Pioneer, had a long stint with the ICC Mutual Fund for about 6 years, and then about 15 years with Birla Mutual Fund before I switched to White Oak. And I also take this opportunity to thank Anindya Bhai for opportunity and ICCA for wonderful event.
Kaustav.
Hi, my name is Kaustav Bhattacharya. So I represent TCG Asset Management. So we have started our journey 1 year back. So we are sort of one of the founding members. So it's a 33-member team. And prior to this, I was with Nippon Alternate for 12 years. And prior to that, I was with ICICI. So thanks.
Thank you. So incidentally, you know, all four speakers are good friends. The gentlemen on my right are from Calcutta. The gentlemen on my left, both are from Mumbai. So we'll come to the first point, need for goal-based investing. Goal-based investing is very, very important. You know, it helps you to take your call and reach you to the ultimate goal, like child education, retirement planning, or buying a house, child marriage, etc. It reduces emotional investing and promotes discipline and helps determine asset allocation. For example, a 2023 study by Morningstar found that investors who linked SIPs to specific goals had 20% lower redemption rates during market corrections. I'll start with Vaibhav. Vaibhav, in your experience, how do goal-based plans influence investor behavior compared to ad hoc investing?
Sure. So my firm belief is that goal-based investing is one of the best way of investing. Like I said, that I've been in the market for last 22, 23 years. One thing which I have seen is that markets are volatile. That's a feature of the market. You cannot change. The only thing you can control is yourself, your own behavior. Like you were also talking about. Now, what happens with the goal-based investing, Anindyaji, is that when you have clarity that why are you investing, then Black Monday, Black Tuesday, Black Wednesday, that does not matter. Black Monday, Black Tuesday, Wednesday, Thursday, something will happen. Someday Trump will say something, someday, Iran, Iraq, or Israel will happen. But when, for example, I am investing for my daughter, who is like 12 years old now, and her education is to be funded, say, 10 years from now, what happens today does not matter to me. It becomes clearer for me that my investment is for 10 years for her education, and therefore daily news does not really matter. Also, what happens is that when the goal is clear, what I've seen is that in the portfolios, the risk management really goes up. Risk management का मतलब क्या है कि, for example, if I'm investing for 1 year, then I will not invest into equity. I'll probably be going for hybrids. I probably will be going for debt or liquid or arbitrage. So in a way, when you marry your investment with a goal, and you choose a product which suits that particular goal, automatically risk management is taken care of. You have clearer view why are you investing. जैसे आप investing, end of the day you can closely correlate to your own life. If I have to go to Bombay, I cannot take any other flight. I have to have a flight which takes me to Bombay. I cannot take a Delhi flight or a Coimbatore flight. So, and similarly for train, for anything which we do in life. So yeah, I completely believe that with a goal in mind, investment become clearer. You start marrying the product with the right goal, right time horizon, and journey becomes very easy. Then my Black Monday, Black Tuesday doesn't really matter.
Thank you. Very nicely put, Vaibhav. I mean, a very good example of the flight. I mean, there may be turbulence. I mean, I'm not taking the Air India incident, that's an aberration. But there may be turbulence, but you eventually reach your destination if you board the right flight. My now question to Kaustav. Kaustav, you represent the alternate fraternity.
Correct.
So in the context of PMS and AIF, how does defining long-term financial goals upfront help high net worth investors remain focused and less reactive during periods of uncertainty or market stress?
So I think typically what we do is, please understand something. I think whenever we go and meet customers who try to invest on what exploring probably on the alternate side, AIF or maybe PMS, understanding is slightly higher than probably a retail investor. This is one thing. And while do the contracting, I think time horizon is probably something you make very clear that, if you really want to create wealth, you need to be in this market for at least 5-7 years, irrespective of market cap or anything. So once you make the time horizon very clear, see, you cannot make money. You can make money in 3 years, but if you really want to build wealth, making money and building wealth are absolutely different. If you really want to build wealth, then you have to stay invested for 7-8 years. Then only compounding can come into play. Finally, it's all about that only. So once you make that thing very clear to your investor or your partner, whoever, the stakeholders, whoever you are interacting, then the capability of absorbing risk, capability of withstanding volatile times, we thought probably they are better suited. So it is very, very, very important while you are onboarding any investor or you are approaching any investor, that needs to be very, very, very clear why you are coming. I think as far as I think Weber was talking about goals, I'll just touch upon that also. I think mostly the investors of PMS and AIF, you will see their goals are slightly different from us. So my goals and my investor goals are slightly different. Most of their goals are met. So because of that, I think because where they are placed in life, so I think their ability to withstand risk is very, very, very high. So that's how we try to play it.
Thank you. I'll move to Gaurang now. Gaurang, can you, from your experience, can you share an example where a goal clarity has helped an investor stay invested during a market downturn?
Yeah, so there are there would be a lot of examples where goal clarity obviously helps the customer to stay invested, and that has been like the nature of goal investing. So typically, just to add to what goal investing does, so basically there's a product called SIP, everybody knows, but the average period of holding an SIP product today still is very low. It is not even 5 years today. But when you convert it into a goal, like we've done SIP, which is like an SIP where we call it Freedom SIP, where people start getting retirement kind of benefits after holding it for 10 years, 15 years, 20 years kind of time period. There, in fact, we see the average holding is pretty higher. The stoppages are pretty lower compared to a normal SIP. So that is what goal investing does to a customer when you attach a goal to it, whether it is childcare, whether it is retirement, whether it is any other form of goal. The holding period for that investment automatically becomes higher, and people are deterrent to stop that or come out of it, and that is what goal based investing actually does to investors. And there can't be I mean, not a particular example, but we've seen on a broader terms that when you attach gold to it, the longevity of that investment stays for a very long period of time.
Thank you. Sandeep, millennial investors is one of the, core target segment for the industry. So how can advisors better communicate the value of gold investing planning to millennial or the first time investors?
Thank you. I think these millennial investors are the investors who are going to shape the country for the, say, next 20, 30 years. So their behavior is very important. How they behave, it will decide the future of the country. It will decide the future of the industry. Like if you see the IQ level of the millennials, it is improving. So they have a better IQ, but they have a lesser patience. And that is very much required. Today is say, International Yoga Day. So I think there should be some meditation is required, because the brain is getting like a popcorn brain, what we call. Because generally what should happen, there should be a moving body and a stable mind. But what is happening, now the mind is say moving and the body is stable. And that is creating that popcorn brain. And in this current social media time, where the average time for any, say, reels, if you watch, it has come down to 8 seconds from 2.5 minutes. So that is how the millennials, they are also behaving when it comes to the, say, investments and finance. So they need a lot of, say, hand-holding. They need a lot of guidance. They have a better IQ. And I think if they are proper guided, and they are the role of the financial advisors, they are the role of like all the stakeholders who are here, it becomes very important. Because for them, this goal-based investing, what you are talking about, it is very important. Because the biggest challenge and the goal today for any young, say, person is the retirement planning. So that is very important, because our longevity is now, say, getting increased. So the average life may be a guy who is like in his mid-20s or early 30s, he may live up to 80, 90 years. And his like working age could be some 50, 55 years. So he has to plan another 25, 30 years post his retirement. So there the goal is very important. So he should understand, because what millennials they are doing, or the young generation, Gen X, what we call, they are doing, they are like living today. So they are earning today, and then they are like spending whatever they are. So their savings are less, their investments are less, but they have to understand they have to survive post their retirement 25, 30 years. And that is a big question, because India like will not provide such a social security to the our people. So there, I think, and there are a lot of millennials now. They are coming in also. They are understanding the importance, and that is how you see the number of SIPs and investments, which is like moving up. So there is a myth we feel that a lot of these SIPs, they are coming through fintech platforms, and the millennials, they are like investing on their stinks only. So this is not the case. There could be many cases likewise, but many serious investors are there who are looking for some goals. So that is very important.
Thank you, Sandeep. We'll move to our next topic. Next topic is patience and consistency with portfolio. I think the most common question or concern we face from our investors are, when is the right time? Abhi karna hai, kal karna hai, market kaisa hoga? I mean, nobody knows, okay? Some people try to predict. I don't know. In my more than 25 years of life, I often found that people who are predicting us, kind of fools. So volatility often tempts the investors to time the market, but staying invested and maintaining regular contributions, especially via SIPs, helps ride out short-term noises and capture long-term gains. Just to share a data, S&P BSE Sensex has delivered a CAGR return of 11% over last 20 years, despite multiple bear situations or the bear markets. So my question to Kaustav, given the nature of discretionary PMS and the long lock-in of some AIFs, how do you counsel clients who grow anxious and consider redeeming or altering strategies during short-term volatility? Because there is no exit route essentially. So how do you manage that?
See, I think the real challenge lies, while you are approaching a client, as I told earlier, while you are approaching a client or while you are onboarding a client, the real challenge lies there rather than the when client is onboarded. So it's very, 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 very important. I understand. I think this proposition cannot be scaled up to a large extent, but whatever extent you can do it. I think the moment we are meeting a client, we try to make very, very, very sure. Okay, I think why someone is trying to come in probably alternate space or a PMS space, why not a mutual fund? So when that query is typically addressed, because honestly, I feel if you really want to invest in a large cap portfolio, why would you come into PMS? There is a lot of mutual fund, you go there. So mostly we see the audience we see is the bespoke sort of investor who wanted to take that flavor, probably not differentiated portfolio and all. So there, if you really want to create wealth, you have to understand you need to stay invested, because the cycle it may be cyclical, it may be anything else, but you need time frame. So while contracting, we make it very, very, very clear. You really want to make wealth, you need to be there for 5-7 years. 3 years it doesn't work. So in alternate, of course, we understand there is an exit barrier. You have 3%, 2% sort of exit load. But if the contracting is done in a proper way, I think that works. And finally, we do a lot of calls whenever, see, every investor is a long-term investor till the time market falls. When market falls, no one is long-term. So we try to show them reason your compounding can only take place only when you spend probably 6-7 years. You need to give it a sufficient runway. Then only things can fall in place. So this is what we try to do, basic things we try to do, but I think this works.
Right, Kaustav. I'll move to Sandeep. Sandeep, you would handle anxious distributors, clients. So how do you use historical data or market cycles to convince an anxious distributor or a investor?
So investors, first coming to the investors like so many investors, still they are not coming to the mutual fund or the capital market. In mutual fund, like many investors, they still feel the biggest, they perceive that there could be a loss of capital. That is the biggest fear for any investor. So, and then this volatility things, what Kaustav he was telling, it comes in the picture. So first we should understand that volatility is not a risk. Risk is the capital loss, and volatility will not lead to the capital loss. Capital loss will only happen if he makes some mistakes. If investor take any wrong decision at some time, then only the volatility can hit him very badly. Otherwise, I think like I'm working in the industry for more than 20 years, I always say that long live volatility, because volatility is the only thing which gives opportunity to any investor to make some gains. Because there is a volatility in the market, that is the reason we are making so decent returns. So that is one thing. And if you see the data also, historical data, like we say that we are fortunate that we are born like at the time in India when India is growing so fast. So once Warren Buffett was asked how did he make so much of money, he told there are two things. First, that I invested in equities. Secondly, I was born in America when USA was like growing so fast. So like all the investors and people who are sitting here, so we are fortunate that we are like at the time when India is growing so fast. And if you see the examples also, so I think we can take 2-3 cases. In 1992, during Harshad Mehta scam, okay, the market fell down. It was like so if someone has invested at the peak of that Harshad Mehta time, 1992, and if someone say remain invested till date, still the return would be some 9% CAGR. If you see the 2000 tech bubble, say that time, even at the peak of like Harshad Mehta, the PE was 45. Like during the tech bubble, the PE was some 28. Still the return would be some 8-9%. If you see the Lehman crisis, someone has invested at the peak of Lehman crisis, then also the return would be around 10%. If someone has invested like pre-COVID, when the markets were like 42,000, still the return would be some 12-13%. So the key is like you have to remain for the longer term. If you are investing in equities, you have to keep patience and you have to believe in the economy. So the biggest key is like the growth of the economy. We know that our economy is growing by say 10 to 11% in nominal term, and that is how the market will follow. So that is how I think they should be.
Right, Sandeep. So you highlighted about patience,
Yeah,
patience
yeah,
in
patience is-
investing.
yeah.
So Gaurang, on that note, my question to you, uh, in a case of a market meltdown or a market stress, would you, like Sandeep said, would you suggest stay calm, or would you also look at rebalancing?
No, definitely. In case of market meltdowns, I think a lot of maturity has come with the investments with the investors as well. So if you look at the recent example of the last 6-8 months, like from September peak, the market came down for till April when the Trump tariffs were announced. We really did not see much redemptions happening or much panicking happening with the customers, even though the market corrected from almost a peak of 84 of Sensex to 73. So that indicates that yes, somewhere the distribution, the investments, the investors, everybody is getting matured, and they've seen various life cycles, the various market cycles which has been happening. So definitely in these kind of a things, definitely the customers that we would suggest is to stay calm, because prolonged, if you see the smaller events, maybe there could be a knee-jerk reaction because of smaller events happening, maybe a Trump tariff getting announced, maybe an election company coming, maybe a war coming. So those kind of knee-jerk reactions are happening, but ultimately what it is the markets are slave to earnings, the markets are slave to profitability of the company. Why the markets have been doing well is because obviously the corporate profits have been increasing, and the corporate profit to GDP, which I think 5 years back was 1.5%, now it is at 4.7%, and thereby the market is giving a spectacular rally and return. But yes, coming back to the question, I think staying calm is the best way. We've seen portfolios where people have stayed put for a very long period of time. They've managed to make a brilliant returns on the market as well. A lot of things on Twitter is happening right now where there's a popular thing which is coming right now. One guy just opened his dad's thing, and there was a 1 crore kind of a share that was lying on the paper form, and today's valuation is 80 crore for those investments. So that is what happens when you stay calm. Uh, Jokingly, in our company, we talk about how returns are made in the market. So it is either made if you forget about your investments, or somebody who's died, so that investments are just lying around and they grow in such a proportion that basically that's the best kind of a returns that you can make.
Thank you, Gaurang. So, Vaibhav, I would now like to move to you. Both Sandeep and Gaurang highlighted how a customer should behave in a kind of a market stress. So, my question to you would be, advisor also has a large role when the market stress, and we live in India. Here the emotional angle plays a large role. Sometimes rather than people think from the heart than rather from the head. So what do you think in such situation would be the behavioral role for an advisor?
For guiding the investor.
That's right.
See, all my co-panelists have highlighted about compounding. So compounding we have also learned it from our school days, compounding. But I think we have not emphasized enough on the fact that compounding का जो सबसे बड़ा rule होता है ना, वो ये होना चाहिए that never disturb compounding. Then only it works, right? People like all of us have spoken about how markets will do. If we give time, money will be made. But what is more important is the journey all through. Like at White Oak, we did some analysis, and this analysis is for like about 18-19 years. उसमें हमने क्या किया that what we did was that we did one analysis जिसमें दो comparisons किए. One of an investor who was changing lanes. जो भी last year का best performing index था, we did not take active funds, but we took index funds for clarity of calculations. So last 1 year का जो भी best performing index था, the investor in the subsequent year moved there. Because क्या होता है कि most of the investors, if they don't have enough knowledge, तो आपके पास सबसे बड़ा बैरोमीटर क्या है कि जो बढ़िया परफॉर्म करा वहां पे पैसा डाल दो. तो अगर पिछले साल मिड कैप था, ये साल मैंने मिड कैप में पैसा डाल दिया. इस साल अगर स्मॉल कैप बढ़ी है तो नेक्स्ट ईयर मैं स्मॉल कैप में डाल दूंगा. So basically every year the investor was changing lanes. And then there was another investor who was being guided by an advisor जिसने बोला कि बॉस इंडिया की स्टोरी लाइक गौरांग also said and I think Sandeep also mentioned कि वॉरेन बफे अमेरिका में पैदा हुआ तो पैसा बनाया, हम लोग इंडिया में पैदा हुए तो हमारा पैसा इसलिए बनेगा बिकॉज इंडिया विल ग्रो. नाउ अनदर एडवाइजर व्हाट ही डिड वाज उसने बोला कि बहुत शांति बनाएंगे, इंडिया अगर ग्रो करेगा ना लेट अस पार्टिसिपेट इन दैट स्टोरी. तो 18 साल सेकंड इन्वेस्टर जो एडवाइजर के थ्रू आया था उसने एसआईपी किया इन अ मिड कैप फंड और भूल गया पिछले साल क्या बेस्ट परफॉर्मिंग था, छोड़ दिया. नाउ द फर्स्ट इन्वेस्टर फॉर 18 years अनिंदर भाई हैज कंपाउंडेड हिज वेल्थ बाय अबाउट 14%. कितना टैक्स कितना चार्जेस वो तो छोड़ ही दो आप. But the other investor who did not do anything, just heard the advisor कि पैसा डाल के भूलना है, he compounded his wealth by 17.8%. Now, the first person would have so many sleepless nights. कितना तो रिसर्च किया होगा, अभी पिछले साल क्या अच्छा कर रहा है, अपना रिस्क प्रोफाइल तो आप भूल ही जाओगे ना. मेरे को क्या, मेरे रिस्क प्रोफाइल के हिसाब से what should I buy is a secondary question altogether. If I am not getting advised by someone, you know what would be my trigger points? My trigger points would be कि जनता क्या बोल रही है, सब बोल रहे हैं मिड कैप खरीदो तो मैं भी मिड कैप खरीद लूंगा, परफॉर्मेंस बोल रहा है स्मॉल कैप खरीदना तो मैं स्मॉल कैप खरीद लूंगा. व्हेन यू डोंट हैव एन एंकर like an advisor to guide you, you know how to go about managing your funds, how to stay long, then chances of you making money lesser is much higher, which data also proves. और दूसरा मुझे क्या लगता है, I mean all of them they have spoken, so I will not touch upon again and again, but behavioral aspect क्या होता है कि इफ यू रीड साइकोलॉजी और फिलोसफी एनी सब्जेक्ट यू रीड, तो वहां पे एक कॉन्सेप्ट होता है पेंडुलम का कि ना इंसान चाहे जीवन हो और इन्वेस्टिंग हो, मोस्ट ऑफ द मिस्टेक्स हैपन एट द एक्सट्रीम्स. या तो बहुत फियरफुल हो जाते हैं, बहुत ग्रीडी हो जाते हैं. एडवाइजर का काम सिर्फ हाथ पकड़ने का है. जब ज्यादा ग्रीडी है दैट वी शुड नॉट इन्वेस्ट मोर. व्हेन देयर आर सो मच ऑफ फियर, एडवाइजर का काम होता है कि भाई इतना ज्यादा डरने की भी जरूरत नहीं, पैसा डालो पैसा बनाएंगे. एंड दोज आर द पीपल हु हैव मेड मनी without sleepless nights. That is most important.
Wonderful. So we'll move to our next topic, that is asset allocation. Okay, asset allocation, you know, as we know that it's a mix of different asset classes like debt, equity, gold, or maybe silver. It often cited as the most important driver of return because it cushions portfolios against sharp declines and helps align risk with an investor's right time horizon. For example, in 2022, a hybrid portfolio with a mix of 60% equity and 40% debt fell significantly less than a pure equity portfolio when market corrected due to global tightening. So on that, Gaurang, my question, can dynamic asset allocation funds be a good solution during high volatility?
Definitely. I think the best way to introduce anybody who's not into mutual funds and who wants to get the flavor of mutual funds is through dynamic asset allocation, because those are the products which are lesser volatile. They'll not get much shocks on the market either on either sides, on the upward or the downward side. And it's very important that we protect the downside. So that is very essential part of having a dynamic asset allocation fund. And basically these funds, if you look at the history, so you've got balance advantage funds and those kind of categories which are like fairly long perioded now. So if you look at the 10-year CAGR of these products, which is roughly at around 12%, while Nifty at a 10-year CAGR is at around 13%. So even if you are having lesser equity, you are having an average equity of 30-40%, still you are being able to meet what the market returns are, or you are very closer to what the market returns are. So that actually helps a lot into getting the customers very firmly onto the investing part, because the customer doesn't get very shocks on the higher side. But having said that, having told that, the customer still is like, we see that a lot of customers, they don't handle their asset allocation well, because in the last 5 years, if you see, the customer allocation towards equity has gone so high, people have just forgotten about debt. Look at the industry level inflow that is coming on the debt side. customer actually forgets about debt, they forget about asset allocation, they've come into equities and they've come overly into small cap and mid cap. Why? Because they were giving returns. So somewhere chasing of returns are happening, greed and fear that needs to be controlled. But at the same time, I think all these dynamic asset allocations are a good way to calm down customers, to keep them invested for a long time and give a very good consistent kind of returns for them.
Thank you, Gaurang. Sandeep, my question to you, how do you balance a investor's risk tolerance with strategic asset allocation?
Generally what happens, investors, they chase schemes for the returns. Okay, they feel ki if they should invest in particular scheme to get the desired returns. And like experience says that schemes never give the return. It is only the asset allocation which gives the return. So you have to do your asset allocation properly. And like asset allocation is key to all the, say, queries which comes in. So we started with that goal-based investments and all. We talked about risk. So like asset allocation is key to minimize the risk also. Because there could be, there are different asset classes also. Like you see that sometimes gold will give you a very good return, or equity is giving good return, or debt may give you a good return. So asset allocation is something which will make a balance to it. Secondly, if we talk about the goals also, so like when we talk about the goal-based investment, so generally we talk about equities every time. Most of the time we talk about some retirement plans or some children plans, but there could be short-term goals also. So there could be some goals, like someone could have a goal like after 6 months, after 1 year or 2 year also. So there also that asset allocation, it helps, because you can have some short-term, like as Gaurang told, you should put some money in debt also. That can also help you to get your goals. So asset allocation is the key. You have to, as an advisor also, advisor has only 2 things to do to advise to the client. There is say no other third thing which he can do. First is the asset allocation, and second is the diversification. So if you are doing your asset allocation and diversification, so like investor can easily sail to the volatility, he can easily manage the risk and everything. And coming to that strategic, say, asset allocation, yes, that is also required. That is again the sub part of the asset allocation. Then it depends on the risk tolerance, risk profile of the investor also. It depends on his like income, his his age and everything. So couple of things are there which can be discussed. Like there cannot be one tailor-made solution to everyone. So that is why we call it personal finance. We don't call it as a financial planning. We call it as a personal financial planning. It depends from person to person, and that is where I again reiterate that the role of the financial advisor, MFDs, it is very important, because there is no tailor-made solution. So it has to be a personal finance guidance. So that is where it is.
Right, Sandeep. So, Bhairav, my question, we heard both Gaurang and Sandeep talking about asset allocation over time. So tell me, according to you, whether asset allocation should be dynamic according to the market condition, or it should be a continued journey depending on the time and the goal?
So my personal belief is that it should be dynamic. Dynamic asset allocation, according to me, is the best way and best kind of asset allocation. That's my personal view. Because what happens is that if you study markets, markets will always rotate. Winners will always rotate, because जो आज के headwinds हैं, they become tailwinds, and today's tailwinds someday become headwinds. So markets will always keep rotating. Even if you look at headwinds, not within the markets but outside markets, in other asset classes also there are same economic theory, चाहे वो real estate हो, gold हो, debt हो, any instrument. So for an investor to stay glued towards the goal, a dynamic asset allocation will reduce volatility. जो मैंने हम लोगों ने पहले भी बात किया, the biggest job of an advisor is to manage the anxiety of investors. Now, how do you reduce anxiety? Because when you add couple of asset classes in the portfolio, basically the volatility of the portfolio comes down. कभी equity अच्छा करेगा तो debt बुरा करेगा, कभी debt equity volatile है तो debt cushion दे रहा है, या कभी gold cushion दे रहा है. So this and we know that all asset classes are either positively correlated or negatively correlated. Now, what happens in a dynamic asset allocation is that a good science or a good fund manager will keep maneuvering between different asset classes depending on where the cycle is. So that automatically reduces the volatility. और दूसरा, most importantly is that, if I look as an investor and not as an advisor or a mutual fund person, but as an investor, what also happens is that when I am glued to a goal, the time also changes. So, for example, like in the first question, I gave example of my daughter's education, which is like 10 years away. As I'm approaching towards that goal, which is say 2 years from now, or say 1 year from now, a dynamic asset allocation will also take care of lower equity allocation because I am approaching a particular goal. So from investor standpoint or distributor standpoint, dynamic asset allocations are the most important. In a simple line, we are in the business of managing anxiety. Anxiety will be taken care only when we target volatility of a portfolio, and volatility of a portfolio is very well managed if all asset classes are there, because all asset classes are either positively correlated or negatively correlated. Let that be taken care by advisor or the fund manager.
Thank you. My humble request to the audience that, my co-panelists are all industry leaders. Okay, they have taken their time out on a Saturday morning to, share their valuable insights with us. So would really, really appreciate, while we are not in school, if you can put your phones on silent mode or speak softly, or if it is a very important conversation, kindly step out of the hall and speak. The least you can share the respect to my co-panelists. Thank you. Kostov, moving to you. Asset allocation is often seen as the cornerstone of portfolio resilience. How do you approach strategic versus tactical allocation within PMS and AIF mandates during turbulent market phases?
So I think it works in two ways. One is, I think, if you look at our portfolio vis-a-vis clients' portfolio. So I think clients' portfolio, entire clients' portfolio, if you look at, I think we have seen in recent times, I think there's been a lot of appetite for private credit or performing credit, maybe a InvIT, maybe a REIT, maybe a warehousing. So I think investors keep on doing their asset allocation on their own portfolio. So these are slightly aggressive product, but that's fine. I think that works. Apart from traditional gold, FDs and all, they keep on doing that. Now coming to our portfolio, how we manage vis-a-vis market volatility and all. So asset, I think on PMS space we have only one option. We can mostly shift money from equity to liquid, and probably that's how we manage. So PMS has an option where, market is volatile. Probably you can come 30-40% on liquid. That we try to exercise at times. But we have seen liquid call mostly on a portfolio we don't take. It is mostly on the valuation aspect. So at times you need to wait for the right valuation to get into certain stocks or take exposure in certain stocks. There you use the liquid, probably debt call or liquid call more often. So that's how it is. So it has very brief, probably, role in our business. So that's how it is.
Okay. So ladies and gentlemen, we'll move to our last topic of this panel, that is AI-driven personalized advisory. I mean, AI is the buzzword. Everything is, everybody is looking up to AI to suggest solutions. People are saying that the personalized advisory might eventually go away with the advent of AI. So, AI tools are transforming the way the financial services are delivered, making it is more personalized, real-time and data-driven. Robo-advisors and advanced algorithms now create and monitor portfolios tailored to the individual goals and risk appetite. According to a Deloitte report, 66% of the Gen Z investors prefer automated AI-powered platforms for investment recommendation than from an advisor. So, Bhairav, my question to you, do you think that can AI really replace the human touch in investment advisory, especially when there is a volatile market?
I firmly believe it will not. See, देखिए, we have to understand, जैसे internet आया था ना 98, 99, did it take away all the jobs? Answer is no. But most of these technological advancements, they become force multiplier. Force multiplier समझते हैं ना आपकी? For example, today, if somebody has to do analytics, how will somebody do? They will use Excel sheets. They will go here, there, take a lot of data from maybe 10 sources and then create something. Now, MFDs need to understand that it is going to ease their life in a way that, like I said, force multiplier. कि अगर मेरे को अपना portfolio बना के देना है किसी को, AI probably will help me do analytics in like click of a button. I was with some MFD yesterday and they were saying that हम business कैसे बढ़ाएं. I asked one question that how many products, number of products your customers have. You know, they could not answer because they have not done the analytics. But अभी वो AI को use करेंगे, 5 मिनट में बता पाएंगे that where can I sell equity, where can I sell SIP, where can I sell say liquid and so on and so forth. So artificial intelligence will, for MFDs, it will, or for investors also, it will help them take decisions much faster. But I don't personally believe that it will still be able to manage anxiety of investors. Like what I also mentioned in my previous answer, that we are in the business of managing anxiety. You know, what conversation can happen over a coffee can probably not happen on internet, or maybe an app, or maybe a tool. What happens is that जैसे वो right swipe और left swipe होता है ना, that market आज गिरा तो मैं फटाफट पैसा निकाल दूं. So what will happen is, according to me, if you ask me, that role of advisor will become even more important. But yes, if advisors don't, uh, uh, adopt technology, then it's a separate thing, because AI, anything related to tech is actually more to do to facilitate business. It is not going to take away business. But yes, for example, my customer is sitting in say Guwahati, I'm not able to transact sitting in Calcutta, then there's a problem. If somebody wants analysis of their portfolio, how much exposure is large cap, how much is mid cap, if I'm not able to answer, then there is a problem. But yes, all these tools which are coming, AI tools, I think they will become force multiplier more than competition. That's what I personally believe.
So let me share a point on this AI bit on a lighter note. A friend of mine shared that he lives in Seattle. This was about 4 or 5 years back. He and his wife had some argument, and they had used the word divorce. So next morning, Alexa has sent them a series of divorce lawyers' email address and phone number, thinking that that would help them. I mean, that's AI for us.
On a lighter note, human intelligence can tell that we are the villains for the audience between lunch. AI cannot.
Good one. Kostov, when AI becoming more prominent, how do you see the role evolving in customizing portfolios, risk profiling, or even timing exits in PMS and AIF, where strategies tend to be more bespoke?
So I'll keep it very brief. I think we have a very clear-cut belief on this. I think, see, AI, of course, this industry is evolving, the industry I'm in. So, of course, scale, as far as the scale you see in mutual fund, it is not there as of yet. It might come someday. As of now, what we see currently is AI has some role on the research piece. So on the back-end piece, probably AI can today probably read a balance sheet very fast. If you need to file a prospectus, you can do it through AI. So those things are there, but I think exit, investment options and all, if you tell me, we still believe that, managing money is still an art. I don't know how much it is pure math in future also, how much it can be, but we have a very firm belief that it will remain an art for some time at least. Yeah, thanks.
Wonderful. Sandeep, very simple. What guardrails do you think we should have for AI-based investment decisions?
So AI, like first, I would like to say that AI is definitely going to be a big game changer, like for everyone, for like every walk of the life, and we have to accept it and we have to embrace it. So like digital, what we say, ki now so many transactions are happening on the digital platform. So the distributors, the partners who have embraced digital, they have grown at a different pace. So AI is like very important. I think that predictive artificial intelligence helps not only to the fund managers to analyze the data in a proper way, but also to the investors to because it tracks the behavior also. So AI gives you a lot of assistance. So now you have to, AI basically bridge the gap between the challenges what investor had and what the opportunities he can. So there, I think AI is going to help investors a lot. It is helping. And as a different stakeholders, we have to be future ready. So that is the call of the day. We have to be future ready. We have to embrace it. And AI is going to be the biggest enabler to take the industry to the next level. So I think all the industry stakeholders, they are ready for it. They are working on AI models. So that depends on us, how we take it for ourselves. Definitely it is helping the investors a lot. So a lot of these new age investors, millennials you called upon, all the fintech platforms, they are using AI in a better way. So AI works like it works like a financial advisor to the any say a customer, a client. So they are making good and best use of it. Now it depends on us how we plug in us with this latest development.
Okay. My last question for this panel to Gaurang. Gaurang, how do you think AI, I mean, Sandeep touched upon on the behavioral aspect. How do you think AI can help the behavioral aspects like panic selling or herd mentality?
Yeah, so AI can definitely help in terms of these kind of behaviors, because they can predict models, and that in fact is happening today also. So we are also like investing a lot into the AI part of business, where we've created briefcases and other things for right now for the distribution, not for the end investors, where it's like a predictive model where it can predict about a little bit on the customer behavior, his likelihood of buying this or selling a particular fund, or buying a particular fund, and all those kind of predictive models are getting developed. And that's the reality, and that's going to happen. Definitely the world is changing, and this AI thing, though we are talking that yes, it is very important that human touch, human behavior, everything will be there, but a lot of disruption, maybe it can happen on the AI front as well, and that is what our belief is. And it's an interesting note is that you can just Google it, the tidal wave by Bill Gates. So one night he just woke up and he wrote a memo to all his one downs at 12 in the night, that how internet is going to change the world, and that happened. And we are in that moment right now, that AI is also going to change a lot of things, the way we do, the way we operate, and we should be watchful of that. At the same time, yes, human touch and human behavior is also very, very important in the decision making part of it.
Thank you. So we have what we learned through our esteemed panelists is that goal-based investments is very important. Asset allocation is the key, to diversify. AI can be an enabler. AI need not replace humans, brain. And finally, volatility is not our enemy. It's basically the price we pay for long-term growth. Ladies and gentlemen, we are a couple of minutes away from lunch. May I request all of you to put your hands together for our esteemed panelists. I think they have been phenomenal. Shantanu, do we have time to take questions?
Sir, we'll take it offline, please.
They will be
Actually,
here.
I have one more presentation. Okay.
13% mutual fund asset management was there in the equity in 2015. Now it has been 31%, just 13% to 31% in May 2025. And it is being there that Indian investor is going, they were a saver, now they are going to be investor. It's an excellent that due to the excellent awareness program, even for the digital transformations. So
Question, please.
My question to all my panelists here, how do you feel that this 13% to 31%, whether this is going to have an impact on the so-called investor like us who are investing in the mutual funds? Because ultimately at the end of the day, we had all savings in the banks. Now we are transferring to the mutual funds.
Thank you.
Just I want to listen.
Can anyone who would like to take Gaurang?
Definitely, I think there's a shift of investor behavior which is happening. So earlier, predominantly people used to, where do they used to invest money? Typically real estate, gold, NSE, PPF, bank FDs, all those kind of things. But post 2020, when people were at home doing nothing in COVID, they started Khelo India Khelo. And people started investing into stocks, into mutual funds, into all that. And that is going to help us because there'll be a lot of liquidity which will be coming into the market. So people earlier, out of the household saving, only I think 1 to 2% that was getting into the capital markets, which now has come to 4.5%. And eventually we see it going to 7%. So the more money coming into the capital markets through direct route or through mutual fund route or the stock route, all those kind of routes, a lot of liquidity gets created, and that itself will help into market stabilization. Typically, that we saw when FIs were pulling out of India because obviously they were going into US investments. At that point of time, the market did not fell that much because there was too much of liquidity in the market. So that's one of the example why all these things is going to help us help all the general investors.
Thank you, Gaurang. We can't take more questions because
Thank
we are
you.
already
We are not
running
breaking
behind
for
schedule.
lunch. Please wait. I have a couple of announcements. Firstly, I'd like to request Mr. Anindo Pal Chaudhuri to felicitate our panelists. Secondly, we have one more presentation before the lunch, which will be done by Mr. Rohit Reddy. And his presentation is very interesting. It's the buzzword today. Next 100 million investors powering mutual fund distribution with AI. He is the global CEO of IOTA Technology, and he'll take 5-6 minutes for his presentation. It's going to be a very interesting one, so kindly hold on because lunch will be after that. And I think our panelists have done wonderfully. Scheduled lunchtime was 2 and we are just 10 minutes behind. Should done.
One small announcement is that please stay back post lunch. You get to hear one of the best mind in India who's amongst us here, Mr. Shomojit Ghosh. So please stay back. You will be able to add a lot of value.
Mr. Pal Chaudhuri to start the felicitation with Mr. Gaurang Ganeriwal. Mr. Sandeep Srivastava. Mr. Kaustav Bhattacharya. Last but not the least, Mr. Vaibhav Chugh. May I request for a group photograph for all the panelists, please? I will request Mr. Chittaranjan Chattopadhyay to kindly come forward and felicitate our moderator, Mr. Anindo Pal Chaudhuri. He is the chairman of BFSI of ICMAI. Mr. Chittaranjan Chattopadhyay to kindly felicitate Mr. Anindo Pal Chaudhuri, our moderator. Thank you, gentlemen. Thank you, all panelists. Thank you for your time. And before the lunch, we have one very interesting presentation from Mr. Rohit Reddy Gopu, Global CIO of IOTA Technology. Over to you, Mr. Rohit.
Okay, I'll try to keep it fast. will try my best to wrap it up in like 5 minutes, though the initial time that was given was like 15 minutes. I'll try to wrap it up in 5 to 6 minutes. Are you all ready for it? Okay, cool. So, quick intro about me. I'm Rohit. I've been an entrepreneur, technology entrepreneur. I've been on the other side of things. Most of the platforms that you use, the models, the algorithms, machine learning. I've been behind the scenes on the tech side. This is the first time I'm talking to a different audience. I generally talk at the technology conferences where there are a lot of developers sitting in the room. Feels so good from the morning that most of you have been talking about AI and trying to figure out how AI, would kind of disrupt your industry. Very refreshing. So quick intro, I'll just, before we move into the topic, I've been an entrepreneur. Currently, I run two companies, one which is very focused at BFSI, which is called IOTA Tech Next. So we are in about 10 countries in APAC. In India, we work with pretty much almost all insurance companies and a few banks as well. And then I run a deep tech AI and cloud consulting company based out of US called Tiny Bay. And I travel a lot, and I've done an all India road trip. Was on the road for 6 months straight. Traveled in car, and unfortunately it was in COVID and I couldn't come to Kolkata. So this is the first time I'm in Kolkata, the capital of joy or city of joy, whatever you call it. Very pleased to be here. And my newfound passion is running. I've started running marathons. So this year I'm trying to run 2000 kilometers, and just started in March, and I'm at 400 kilometers currently. I'm also a part of a Stanford cohort. I recently got selected into a Stanford program for Asian entrepreneurs. I'm a part of an elite group of 90 entrepreneurs that are from Asia, who are growing, and Stanford basically is introduced a program for Asian entrepreneurs, which is a 10-month long program where we get to directly work with Stanford professors and mentors and figure out how to kind of scale within our markets. So moving on, the topic that can you switch to the slides, please? Thanks to a wide set of discussions from morning, most of these things you already know by now, the numbers and all, because everything comes. So one thing that I want to touch upon is where will the next 100 million investors come from, right? So I couldn't find an exact map that captures tier 2 and tier 3 cities, but most of the investors, new age investors, are going to come from tier 2 and tier 3, and it's very important that you have to be present there. If I looked at the data, I think currently about 60 to 70% of the current MF portfolio comes from tier 1 cities, but what you have to be looking at it, tier 2 and tier 3. A very simple reason why this is going to come from tier 2 and tier 3 is because of the India's growth story. A lot of people that were able to send their kids for education are now starting to get into jobs, right? So that which started in 2001 and 2, most of those people are in 24, 25-year age group, which are going to end up getting into jobs. And these are people that are going to send this money back home, right? And if you see, there is still a largely unorganized, chit fund market that's widely kind of there across the country. If you can actually go and educate this, younger generation that's actually doing jobs. Very surprisingly, my friends who are on the tech side of it, doing working with global companies, still send money back home so that their parents put in a chit fund, right? And it's very surprising. My dad does too, right? I work with mutual funds. I do all this stuff. I do hedge funds. I've built algorithms for hedge funds, and very surprisingly, my dad still invests 1 lakh every month in a chit fund, right? So which means somewhere, I think when you go to a tier 2 and tier 3 city, you're still not able to go and convince a retail investor in terms of why mutual funds are good and why they are much more better alternatives to traditional ways of investing money. So this is where you have to be looking at. And one of the biggest challenges here is most of this prosperity that you're seeing around is fueled by credit also. It's not just growth. So you have to be very cautious of this. And this is why, the life cycle of how long an investor is going to continue to invest is going to be depending on how well you are assessing your customer, how well you are assessing your customer's credit worthiness, how well you are able to assess how much of a credit does he have and how much of it is his actual real income. And one of the biggest challenges that you will see here is AI is going to disrupt a lot of these jobs. A lot of people that are in their early careers in any industry are going to be replaced by AI. It's very scared. Unfortunately, I'm on the other side of things that basically build these AI agents that are going to replace jobs. One very sad statistic that I'll tell you is in the last 18 years, every year I used to hire 8 to 10 people, young guys into my company. And for the last 12 months, there is no young engineer that came into my company because most of the work that, engineers that do at the low level engineering that we call in coding is already replaced by AI. Right? So, which means that there is going to be a reverse trend of job losses, which means it's very important that you should be able to clearly differentiate between your customer that's actually, using credit to basically invest or using income and what's their income potential. And AI could basically help you do this classification really well and segmentation really well. So this is again, right? People who are investing directly on PhonePe or Paytm or wherever, they withdraw because there is no thesis, there is no goal, or there is no objective. Because when you go to a traditional advisor, he will first ask you, how many kids do you have? How much do you spend on their school education? Or how much do you actually earn? What are your loans? Do you have a house? Do you don't have a house? How many people live in your house? Where do you live? How much rent do you pay? And then do a financial modeling around it, and then suggest you, okay, you should probably start with a SIP of 15,000 a month or 20,000 a month, which is more practical advice, right? So what you have to be doing is, you will not be able to change the behavior of how people will directly go and invest, but at least you can provide platforms and frameworks where people can answer these digitally, and then that will tell them, okay, probably he wants to, out of excitement, he will start with 20,000 SIP. But if you ask all these questions, you would end up probably saying, no, you should start with the 5,000 SIP, right? So you can start using AI where, in a D2C market also, you can replace the behavior of an advisor with a platform. And your advisors can be your second step, where someone probably is your, so you can also basically divide your customers into two parts. Like you can have a high touch and a low touch customer. So anyone that's probably investing less than 10,000 a month can be your low touch customers, which can still be coming from your platform, but you can replicate the behavior of how an advisor asks questions and how he behaves with the customer in an in-person thing. That can be replicated. And if someone says that, if it's more than 30,000 or 40,000, then you have to basically go and figure out how this can be deployed in multiple different funds, or how do you want to split this into 3 or 4 different allocation, etc. That's where you need high touch. So then you can probably take this as a lead and convert them into a video call or something like that, or a in-person meeting, and then take it forward. So understanding the Indian middle class, right? I think one of the things that doesn't happen well is we always think that we know our customer, and most of the times we do not. Because we generalize and say that, okay, because he's a teacher, we kind of classify and say that he's a teacher, but it's not going to be the same. Not all teachers have the same behavior when it comes to investing, right? So it's very important that you understand who your customer is in depth, because we are in an era where most of the times the myths are created and busted both on WhatsApp. So you have to exist in the same platform where these are being created. As an advisor, you should be much more proactive on YouTube, on Instagram, and WhatsApp, wherever is your consumer and whatever the content that he is watching. This is very, very important. Someone very nicely pointed out in the morning that the attention span is very less. So when you meet a customer, try to observe them, try to understand how they are using tech, and go pass this feedback back onto your MFDs, because this is where you as a team can really kind of change the behavior of your customers if you understand them really well. So that only can come when you basically sit with them, spend time, understand what they are doing, how they are basically coming to these decisions. How can AI help build trust and scale? So 3 things. Most of these are being discussed from morning again, but I would just quickly reiterate on this. Hyper personalization is the most important thing. So both regulators and MFDs can use Gen AI to deliver global content that's like pan-India content. You can probably sit and articulate what you want to deliver, but translate into vernacular and do it at scale, right? You don't need like 30 different teams in 30 different states to translate content now. AI can do it for you. So you just need one central team that can basically do this across the country, and you can do it at scale. You don't have to really spend time going to different design agencies that basically used to do this content translation, etc. So all of that is being replaced by AI. So what happens when you basically are able to translate this in a vernacular language and in the language that the customer understands is it builds trust. And most importantly, there can be a lot more content that can be done on the financial literacy at the again vernacular. You have to basically have your YouTube channels in Bengali, Tamil, Telugu, Marathi, whatever the languages. But it's very important that you should have the digital presence in vernacular. And empower your advisors with AI. This is the most important thing. As I told you, D2C is going to grow and it's going to grow big. At the same time, there'll be a lot of more customers that will also, because there are two parts here. One is India is growing. If you see, HDFC is the world's most, from a market cap perspective, most valuable bank. India produces more two-wheelers than any other country in the world today. So these are all things which is, India's growth story. Because India is going to grow, you will see a lot more investors that are going to come into the investment life cycle, which means your advisors who were probably talking to 100 people earlier will now have to talk to 300 people and 400 people. So you have to figure out ways on how AI can help them do better, wherein you can replace a lot of mundane work what your advisors on the field do with AI and make them empowered with AI so that they can deliver hyper personalized content when they are meeting in person as well. And then from the D2C perspective, before you kind of lose this to another fintech startup, you can probably create channels and mechanisms where you can actually acquire this customer even before a fintech acquires, because there is always better possibility and probability that you have more data about the consumer behavior than any other fintech when it comes to investment perspective. So before they start capturing this market, I think most of the mutual fund distributors should start looking at how you can get into empowering the investor directly, by building co-pilots or whatever it is. And most importantly, as at times, while it's for a good reason, I was always frustrated about mutual fund Sahi kind of an ad, because it was always telling that, you are going and telling someone that, hey, this is good, but you were never explaining why is it good. Imagine the time that was spent, probably I think I was just looking at the numbers that Amphi spent on these ads could be close to 300-400 crores. That screen time that you got on IPL, the most important screen time that you would ever get, you could have used to educate the customer rather than simply saying that it was mutual fund Sahi. You could have used it in a better way, which you did not, right? Just imagine, right? 1 billion people watching this, you repeated the same ad, frustrating ad, when every time this ad shows up, people move away. That is the time that you could have used actually to educate the customer in terms of explaining what is a mutual fund, right? And all that money is gone. You might have seen, and most importantly, what happens is people correlate the growth to this ads. It's not actually. India is growing, and because of that, you're seeing a growth in the mutual funds and not because of the ad in IPL. So what is important is the investor should understand, investor should choose, and then he has to grow, right? So this is fundamentally important, which means he has to take a decision that, okay, I know and I understand that mutual funds are safe and secure or whatever, there is a scope for it. And because most of the people that invest, even after seeing that ad, some 100 rupees or 500 rupees, they don't know the underlying logic of how a mutual fund works, and which is the most important thing. So mutual funds have to be like, ye mera faisla hai, it's my decision, this is my decision, right? No one is owning that. So if you can do that and deploy the money and resources in the right place and the right way, I think there can be a lot more growth, untapped potential that you will see. So yeah, I mean, we stand at a very unique moment. One is the digital wave gave millions access to financial markets, and then, but the AI will actually do something much more deeper. It can give them the understanding. It can give them the financial literacy that you were not able to envision at a scale that you will never be able to envision. Because now for you to kind of go and educate 100 million people, it would not cost you even like $1 million if you kind of deploy it in the right way. And very surprisingly, all the fin influencers that you hate on YouTube have more followers than your Amphi's, mutual fund Sahi campaign, because never in your IPL ads you ask them to go and subscribe to the YouTube channel. That's the fundamental thing that's missing there. But every YouTuber in every single video of his tells you to subscribe to his YouTube channel first. right? So where you deploy your funds and how effectively you deploy with AI, you can do it in much more effective way. So the greater risk is not that AI will replace you. The greater risk is that if you don't use it to include everyone and deploy it well, you will not be able to ride the wave. And this time, while you are not riding the wave, the possibility that someone else will come and ride the wave is also very high. Because all the knowledge that you had access to all this while was exclusive to you. Now that's not only exclusive to you, but it's inclusive to everyone. Because for $20 a month, I get to hire the best investment advisor in the world at a fraction of a second, right? I mean, it can replace pretty much everyone in this room. So the only way you will go along or ride along this wave is when you are basically trying to use AI and include everyone. So the next 100 million investors won't be found by pushing more products. This is very important, but they'll be created by building their confidence, right? If I'm a confident investor, I will go and tell my classroom of friends, my colleagues on how to invest. So if you teach a person to understand mutual funds better, then the chances that you will grow will be much more higher than launching more products. More products are needed, more categorization is needed, but more than that, building the confidence in the investor is what is going to be important, and we can build that future together. Thank you, gentlemen, for giving me this opportunity and being a nice audience.
Thank you so much, Rohit. Unfortunately, you are between lunch and the audience. I have a couple of important announcements to make. Firstly, there is a lucky draw after the next session, last session after lunch. And people who want a personalized memento and has not taken the photograph, only during the lunch break, you can please go to the Presto booth and get your photograph. These mementos and lucky draw gifts will be distributed at the end of the summit. Thank you. Please join us for lunch.
अभी नहीं बाद में